prepared whatever chapters we have discussed. Yes, material, labor, overheads, and yes, even Shetty sir's portions, whatever he has done, completed. All completed Shetty sir's class portions. Okay. So I think partially done then. So Shetty sir's portion partially done, na? Completely done, na? Nimdo. Your preparation. Sir has done.
Partially done.
Partially done, na? Okay, fine. But I hope you have planned. How many of you have done the each hour plan? How many of you have done the each hour plan that I discussed? Huh? Nobody, yeah? Nobody planned out? Any kripa? ಹಿಂಗಂದ್ರೆ
I
ಅರ್ಧಂಬರ್ಧ
have done
ಅರ್ಧಂಬರ್ಧ huh? Only for one day you did, huh?
2 days, I think so.
2 days you
Yes, I
planned.
have to. Yes.
Plan out for the whole thing. It will not take much time. If you plan it out, then stick to it such that you cover all the syllabus. What happens? You'll otherwise end up doing only process costing, only margin costing, only cost sheet. That's the problem. Okay. That should not be the approach. You should cover all the chapters, right? And all variety of chapters. That is what you have to do. Okay, everyone? Yes, at least from now onwards, implement that. Okay, sit straight, all of you. Yes. So the next concept I had completed till overheads. Okay. So the next concept is activity based costing. Sit straight, all of you. Yes. Again, very important. Activity based costing is also for overheads only. Most important thing this is. Yes. Do not apply it for again direct cost. Right. It is only for indirect cost, that is overheads. Clear? Right. In absorption costing or overheads chapter what we discussed, their absorption, there is a traditional base of absorption was happening on basis of what, right, on one unit basis. That means we were departmentalizing the overheads into production and service departments and then absorbing the cost. Remember, all of you? Yes or no? We were departmentalizing the overheads. Here it is based on activities rather than departments. Here it is based on activities rather than departments. Is it clear? Under activity based costing. Correct? Very simple. You need to know only three things. What? How to divide, how to multiply, how to add. DMA. If you know how to divide, how to multiply, add, nothing like it. There is nothing in this chapter. Very, very simple chapter. Only thing is, because the chapter is so simple, sometimes the problems are lengthy. Right? So you need to gauge by looking at the question whether it is too lengthy or not. Now, just because there is ABC, you cannot skip. Sometimes the questions are very simple. It will not take much time. Artha ita. All of you. It will not take much time. Right? Oh, ABC andre skip ಮಾಡೋದು. I never said that. Right? Read the question and see if it's too lengthy. Only then you may decide to not write this question because you will not have enough time to complete the paper. Understood? But otherwise, sometimes very short problems also come and it's very easy. In fact, easy, first of all, it is easy, everybody knows. So you will get accuracy in the marks that is there. Clear? If you attempt it, you definitely get the marks. But question is how long does it take? If it does not take much time, then it is a bonus question. You must attend it. Did you understand? Yes. So blindly you cannot decide whether you will write ABC or not. You need to check. Is it clear? Yes.
Yes,
All right.
yes.
So first, find out what are the activities. Concentrate on all of you. Find out what are the activities. Then, you know, aggregate the cost for each of those activities. How will you do that? Right? Sometimes directly given in the question, this activity, this is the cost. Artha ita. They might have given. Otherwise, right? You will have the overheads given, traditional overheads, clear, all of you. Then they would have given you what are the cost drivers. You have to find out what is the cost per cost driver and then multiply. Is it clear? Cost per cost driver and then multiply. Yes, what is the cost driver? Right? Anything that drives. So basically, for example, in case of stores, the store requisitions could be a cost driver. Clear, all of you? Yes. So you find out what is the cost per cost driver and then multiply it finally and then add it up and find out what is it for the entire, what is the total overheads. Is it clear? So total overheads will be there, activities will be there. Find out what is the cost pool for each of the activities, then use that for the particular products and then do it. Understood? Cost per cost driver you would have done for the activities, then they would have given you certain products. For those products, you will use the activities and then do it. We'll go through one of the simple questions. Clear? So that's it. There's nothing much in activity based costing. Very, very simple chapter. Certain theory questions are there, like unit level activities, batch level activities, product level activities, and then facility level activities that we will go through in the CAPS material. More than that, there's nothing much to learn in this chapter. Okay, quickly, let's go through ABC. Yes, open your revision material, revision CAPS material. Yes, page number
37. 37.
37. Activity based costing is one of read. Yes, quickly.
Activity based costing. Activity based costing is an accounting methodology that assigns cost to activities rather than product or services. This enables resources and overhead costs to be more accurately assigned to products and services that consume them. Unit level activities, batch level activities, product level activities, and facility level activities are the categories of activities helps to determine the type of activity cost driver required. ABC is very much useful to the organization with multiple products. One of the few weaknesses of ABC is it is very costly and cannot be applied for all the companies. The use of ABC as a costing tool to manage costs at activity level is known as activity based cost management, that is ABM. ABM is a discipline that focuses on the efficient and effective management of activities as the route to continuously improving the value received by customers. ABM utilizes cost information gathered through ABC. The value added activities are those activities which are indispensable in order to complete the process. NVA activities represents work that is not valued by the external or internal customer. NVA activities do not improve the quality or function of a product or service, but they can adversely affect costs and prices. Activity based budgeting is a process of planning and controlling the expected activities for the organization to derive a cost effective budget that meets forecast workload and agreed strategic goals. Key elements of ABV are type of work or activity to be performed, quality of work or activity to be performed, and cost of work or activity to be performed. ABC, that is activity based costing, use DMA, division, multiplication, and addition technique. A technique of charging overheads to a product based on various activities carried out in the entity. Cost driver. Factors which determine the activity contributing to overheads. Cost pool. Aggregate all the costs relatable to each such activity. Total overheads under both absorption costing and ABC have to be same. However, overhead absorbed per unit under these two methods need not be same. Cost drivers, activity cost pools, and related cost drivers. Ordering and receiving materials cost, number of purchase orders. Setting up machine cost, number of setups. M- Machining cost, machine hours. Assembling cost, number of parts. Quality inspection, number of inspections. Testing cost, number of tests. Painting cost, number of parts. Supervising cost, direct labor hours. Business functions and their cost drivers. Research and development, number of research projects, personal hours on a project. Design of products, services, and procedures, number of product in a design, number of parts per product, number of engineering hours. Customer service, number of service calls, number of products received, serviced, hours spent on servicing products. Marketing, number of advertisements, number of sales personnel, sales revenue. Distribution, number of units distributed, number of customers.
Now come to the MTP, latest one, May 26. Yes. Look at this question. XYZ company supplies and maintains a range of printers for business customers. The sales department is responsible for selling the printers and related consumables such as ink and paper. The service department provides after sales support, including routine preventive maintenance and repair services in the event of equipment breakdown. Customers are charged a fee per print, and this rate varies depending on the type and capacity of the printer. there is one customer per machine. The company's existing cost system uses a single overhead rate based on the total sales revenue from print charges to charge the cost of the service department's support activities to each type of printer. The service manager has suggested that print charge should more accurately reflect the costs involved. The company's accountant has described to implement an activity-based system and has obtained the following information about the support activities of the service department. Activity, cost drivers, and overheads per annum is given. Overheads per annum in thousands is given. Cost drivers are given and the activities. So you don't have to map it. They have already given what is the activity, what's the cost driver. The following data has also been collected for each machine size, right? Charge per copy, desktop inkjet printers, then office laser printers and high volume production color printers. So there are three type of printers that is there here: desktop, of office laser and high volume production printers. What is the charge per copy? Average number of copies, number of machines, planned maintenance visits per machine per year, unplanned maintenance visits per machine per year, then total number of purchase orders per year, cost of parts per maintenance visit, then labor cost per maintenance visit. Calculate the annual profit per machine for each of the three sizes of the machine, right, using the current basis for charging the cost of support activities to machine, that is based on the revenue what they've given. Calculate the annual profit per machine for each of the three sizes of machine using activity based costing, that is one. And then explain the potential benefits to the company of using an activity based costing system. This is analysis. So basically this will be a comparison of A and B. ಅರ್ಥ ಆಯ್ತಾ? C would be a comparison of A and B. Based on that, you will give your analysis. Understood, all of you? Yes. Now come to the answers. Very simple. ಇದರಲ್ಲಿ ಜಾಸ್ತಿ ಏನಿರೋದಿಲ್ಲ. Yes. Quickly we'll go through the answer. Yes. Did you all take a hard copy of this or not?
Taken.
Yes, yes.
Nine. Yes. So calculation of the single overhead rate based on sales revenue. They've given this, yes or no, all of you. So they found out what the sales revenue is based on the information here. Look at this table, all of you. Yes. Illy. They've given what is the charge per copy, average number of copies per machine, number of machines. Can you see that? Yes. So based on that, it is calculated here, right? Number of machines 300, 60,000 into 0.03. Can you all see here, all of you, 1,800? That's how it has come. And if you want, make a note. It is 1,800 here. This is nothing but 600 into point 0.03, 60,000, sorry, 60,000 into 0.03. 60,000 into 0.03. That is how that has come. Same way they've done for all. 60,000 into 0.03. Yes, 1,800 into 300, 5,40,000. Same way it is done for all the three, and you get the total sales. Now, overheads, I told you, overheads will be the same for whether it is, activity based costing or whatever, and as well as your traditional system, your total overheads will be same always, and total overheads is given here. Can you see this? 1596 in thousands, again important. 1596 are, it is in thousands, therefore it is given here 15,96,000. As a percentage of revenue, it is 18%. The same thing is applied for each of the revenues. Artha aita? So 5,40,000, right? They have applied, and then cost per machine they have found out here like this. Understood? 1,800 into 18, 4,800 into 18%, and then 9,000 into 18%. This is the single overhead rate based on sales revenue. Traditional system. Next comes your cost driver rates. Look at this now. Yes, customer account handling illiದೆ. Customer account handling, all of this are activities, correct? So that is what you see: customer account handling, then planned maintenance scheduling, unplanned maintenance scheduling, then spare part procurement, other overheads. Clear? And then they've given here what is the cost driver: number of customers, right? Then number of planned maintenance visit, all of that is given here. What are the cost drivers? Okay. They have given here planned visits so much, unplanned visits, purchase orders, cost of parts per maintenance, and then labor cost. Can you all see here, all of you? Yes, the same thing is used here. Planned maintenance visit, unplanned purchase orders for spare part procurement. Procurement will be obviously purchase orders. Then other overheads based on number of machines. Number of machines and daily based on number of customers it is done. Right? How you got number of customers here? Illai there. Right? Based on the revenue, you have to use the revenue information to calculate here. Here it is given. See, 300, 800 and 500 in the table above. Here, number of machines. So using that only it is done. Next, come here. So number of cost drivers, 1600. Cost per driver, 79 per customers. How is this done? Look at this. Yes. So illi 1,26,000 is the overheads given here. Look at this, all of you. Where is this? Illi 1,26,000. Can you see this? Yes. 1,26,000. That divided by the cost of, so 1,600 it is divided, and then 79 per customer it is found out. So that is customer account handling. Then comes plant maintenance setup. You know how it is done. First multiply and then divide. Now here multiplication is happening. Right? Multiplication is happening. Again how? Look at this. Planned maintenance. Planned maintenance. Come here. 4, 6 and 12. Can you see this, all of you? 4, 6 and 12. Planned maintenance visits per machine per year. Therefore, multiply into the number of machines. Right? 300, 800, 500 multiply into, right? 300, 500, 800 into 4 into 6 into 12. You'll get total, right? Then this cost divided by this, you'll get what is per visit. Understood? Multiply, then divide. The same thing is done for all of them. Okay? Right? So first you have divided, found out what's the cost per cost driver. Now you are multiplying it for each of the product lines. For desktop inkjet printers, multiply into 4 into 6 into 12. How, sir? 4 into 6 into 12? Idu. Into 4 into 6 into 12. Per machine. Clear? So cost per cost driver into per machine cost is taken, multiplied it, and that is why you're getting here. ಅದನ್ನ total ಮಾಡಿಬಿಟ್ಟು total overhead cost per machine is found out, and based on that the P&L is done here. Copy charge per machine, cost of parts, machine parts, then labor cost, overhead cost, and profit per machine. ಅರ್ಥ ಆಯ್ತಾ? Right? This is the easy part. There's nothing here, only multiply, divide, multiply, add, divide, multiply, add. That's all. Now come here. ABC profitability analysis. This I told you. This is nothing but the difference between the A and B. I told NPDA, all of you. The same thing is done here, right? So illegal, what is the profit you got? Here 676,276 and 380 is as per ABC. Yes or no, all of you? Okay. So what they have done, ABC profitability analysis, copy charge per machine, parts and labor parts per machine, then overhead cost per machine, 834, 299 and 1254. Yes. ಅದು ಟ್ರೆಡಿಷನಲ್ ಸಿಸ್ಟಮ್ ಇಲ್ಲಿದೆ. Okay. Traditional system is here and ABC is here. So ABC they have calculated here. Answer C. Answer C will be a comparison, I told you. Yes, the answer should include the following points. This is the suggestion what it should include anta. Right? The generation of more. I would say this should be quantified. You quantify this, please. Right? Look at the question, all of you. Come here. Explain the potential benefits to the company of using an activity-based costing system. Okay. So they have just told that these are the points. What you could do, because it's a part of this same thing, you can also give a comparison between traditional and ABC. Artha aita? That would be a brownie points, additional points. Idu normal points are there here. What are the benefits of using ABC? It is more accurate. All of this is here. If you can also give how is it better than traditional point costing, nothing like it. Give a comparison, just 1 or 2 lines comparison you can give as to by comparing the profitability of both the machines. You remember I have done one problem in the class. ABC as well as this thing, and then I have told what is the new insights you got by applying ABC anta. That one we have done. Same way ಇಲ್ಲಿ 2-3 lines, because that's not the major part of the question. ಇಲ್ಲಿ 2-3 lines ಬಂದ್ರೆ it will elevate your answer. That's all. Clear all of you? Yes, that is ABC.
Yes.
Okay. Shall we go to the next chapter? All right.
Yes.
Sit straight. Everyone sit straight. We will see admile. The next one, that is, you should always do service costing immediately after your overhead chapter, because service costing only whatever the formats are there, it's very similar to your overhead chapter, that machine are right. Clear? So let us start with service costing, and that's how I want you to prepare also. When you're preparing, do service costing immediately after overheads. Okay. So overheads ABC, this is all you should do hand in hand, because ABC you have comparison always, traditional costing versus ABC. That comparison problems will come. Service costing only same similar format you have when compared to machine hour rate. So you can do that hand in hand. Clear all of you? Now in service costing, it is nothing but what is cost of operating a service. Cost of operating a service, it's also called operating costing. What is operation? Operation will come in your process costing. Clear all of you? Yes. Cost of operating a service. Sit straight, everybody, sit straight. Yes. Concentrate here and keep the videos on. Rajashri, are you there? Syed. All right, listen. Majorly the whole chapter, only most important thing is your cost units. You have a simple or basic unit. Basic unit means only one unit of measurement is used: kg, liter, kilometer, etc. Right? However, in service costing, most of the problems will have composite units. That is when two units of measurement are used. What is two units of measurement? Passenger kilometer, patient bed, room days or room nights. All of these are my composite units. Is it clear? Yes. Now that is what is important. Now for calculating this composite unit, again there are two methods to do this. Yes. What are the two methods? Anybody remembers? What are the two methods that I need to use for calculating the? Yes, tell me. Nobody? Two methods. Simple. Okay, at least if you don't know the technical terms, simple terms ನಾನು ಒಂದು ಹೇಳಿದೆ ಅದಾದ್ರೂ ನೆನಪಿದ್ಯಾ? If you don't know the technical term, I told you it is an average. No, what average it is? One is what average, the other is what average?
Weighted average.
Yes, one is weighted average, the other one is
Simple.
simple average. At least that much you remember, all of you.
Yes.
Huh? Simple average and weighted average, do you remember or not?
Yes.
Okay.
Yes.
So absolute units and absolute unit basis and commercial unit basis. Absolute unit basis and commercial unit basis. Absolute unit basis ಅಲ್ಲಿ ಏನ್ ಮಾಡ್ತೀವಿ? Nothing. Whatever kilometers into tons. Clear? That is my weighted average. Understood all of you? Commercial unit basis means you take the average, simple average of the weights and then multiply into the kilometers. Is it clear? So I repeat, absolute unit basis, this is what we normally follow in all the problems. In all problems, Jani, what is the form method we'll follow? Absolute unit basis. Clear, Nikhil? Absolute unit basis. Absolute unit means what? We will multiply distance traveled into kilometers, into tons. Right? So we do not, so each leg is multiplied separately. Each leg is multiplied separately. Remember, hogodu, barodu, rate of different vehicles, each of them into you do and then add it up. That is absolute unit basis. Commercial unit, what will we do? We'll take average of the loads. We'll take average of the loads and then multiply into total distance traveled. That is commercial unit basis. So commercial unit is based on simple average basis, whereas absolute is based on weighted average. In examination, if the problem is silent, we will follow absolute unit basis, not commercial unit basis. Commercial unit, that is simple average, is followed only when specifically asked. Clear? Yes. Then here also for operating cost, we have a format, that is standing cost. You have in overheads, normally we mention fixed cost. Here we mention standing cost with not standing charges. The same thing, it is nothing but the fixed cost. So standing cost you have, then you have semi-variable cost and running or variable cost or maintenance, repairs and maintenance cost. Clear? Yes. So that format, very simple. Find out what the fixed cost is, total it up, find out per unit, variable cost per unit, and then your repairs and maintenance or maintenance cost, and then find out what per unit is, total it up, and then add your profit margins. That would be, you will get the sales or taking or fare. Is this clear? Now, most important in service costing is the operating cost statement has to be prepared for a certain period. All the costs should be for that particular period. right? If they have given some cost for 3 months, some cost for 1 year, then if the question is silent, I told you, pick the period where the costs are most repetitive. If most of the costs are 3 months, only one is per annum, then you take on 3 months basis, and then the per annum you convert to 3 months. If the question is silent on the period, if the question specifically states, Likita, that you have to prepare an operating cost statement for 6 months, for 3 months, then you need to prepare for that period. Understood? Right? So
Yes.
these are the small points that you have to be careful. Most important is the period. Second is which is fixed cost, which is variable cost. Now depreciation, right? If they've given based on life of the asset, it is fixed. If they've given based on the running life of the asset, then it is variable. If it's based on time, it is fixed. If it is based on usage, then it is variable. So if they've given number of kilometers, treat it as variable cost. If they've given you life 10 years, treat it as fixed cost. Is it clear? The same thing applies for overhead chapter also under machine hour rate concept. Understood all of you? Next important adjustment is the round trip. You have to observe the question and see if it's a round trip or not. If it is a round trip, then you have to multiply into 2. You have to multiply into 2. All this is relating to transportation industry. Whatever I'm discussing so far is transportation industry. Other industries are very simple, right? One problem for each of the industries you solve. Understood? Or at least go through. At least go through. Transportation, you have to compulsory solve. ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಾ? Transportation you have to compulsory solve. Other industries, if you solve one problem at least, it is good. Otherwise, at least you need to probably solve the important adjustments. But going through all the types of industry is important. Other toll plaza is also important. Toll plaza problem artha aita? Nowadays they have
Yes.
been asking that toll plaza problem. Okay, make a note of all this, right? Whichever essay is important, different type, ಅದನ್ನೆಲ್ಲ ಮಾಡಬೇಕು. Give importance to it. Okay, toll plaza problem you should do. Second, you should also do transportation industry. Other industries you have to at least solve one problem. That is good. Otherwise, at least go through. Now, next concept under service costing is equivalent units. Other, I've given a detailed note in your class notes. I want you to read that once on equivalent units. I will briefly explain when equivalent units is used. Equivalent units is used when one cost has or revenue has to be expressed in terms of the other. When one cost or revenue has to be expressed in terms of the other. Please understand what are the scenarios. They would have given you, say, for example, total cost. Understood, all of you? They would have given you what the total cost is, but they've not given you a breakup of it. Clear? That is one scenario. In that case, also equivalent units may be used. How? Because for one category you know, for the other you don't know. ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಾ? For one category you know what the cost is, for the other category you don't know. You can use equivalent units concept to find out what the other category cost is. Example, total cost I know. Is this clear, all of you? Then category A do cost I know. Per unit cost also I know. Category B, I don't know the per unit cost, but I know that category B is 2 times category 1. Category B is 2 times category 1. Artha aita? Then find out what the equivalent units of category B is in terms of category A. Total units you find out, and then you can easily calculate what is the cost of category B. I repeat, you know the total cost, right? You know what is the cost per unit of category A. You do not know the cost per unit of category B. To find out the total cost of category B, or total cost also you don't know, just category A cost you know. Understood? But you know that category B is 2 times category A in whatever terms, right? They would have given in the question. If it is 2 times, then find out what the equivalent units of category B is in terms of category A. Find out total equivalent units. Find out the per unit cost and then multiply into category B. You'll get the category B cost. Understood? Right? If the question already has given you what the per unit cost of that particular category is, then you cannot use equivalent units. You need to go for that cost. Right? So sometimes you may have to use the equivalent units for revenue but not for cost. How will you get to know? A question only cost information they would have given. ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಾ? Adjustments you understand, that is more than enough, right? They would have given you the cost information, but they would have not given you revenue information. Therefore, you'll use the equivalent units. Say, for example, room tariff. They say of the double room is 2 times a single room. Room tariff of the double room is 2 times a single room. ಅರ್ಥ ಆಯ್ತಾ? You know what the single room tariff is. Double room ಗೊತ್ತಿಲ್ಲ, you can do. So, or you know the cost plus revenue or profit, so you can find out total sales. Then using the equivalent units, you can find out what is the room tariff of single room as well as double room. Understood? This is one example I gave. Like that, there are so many examples. Then there is one adjustment. I think lighthouse problem or something. So where the off season is there, right? Hill station problem, hill station. Kindly go through that because it's a beautiful problem where you have season, off season, as well as in under that you have electricity, right? During different months. So that adjustment is important, right? Go through that adjustment also, like that. So there are obviously important adjustments, but in service costing theory part, what can come? Anything conceptually they can ask you theory, or commonly asked question is what are the cost units, the composite units, passenger kilometer, patient bed for different industries. That is commonly asked theory questions. You might get that for 4 marks or 5 marks. Okay, so that part also please go through. Clear all of you? Yes, and then obviously there are certain kind of problems where margin costing adjustments will come. That is there throughout the paper. Margin costing adjustments. Okay, so these are like a different category of problems that you have, right? I'm not talking about the different industries. I told you that you have to anyway do education industry, health sector ಒಂದಿದೆ ಎಲ್ಲ study material ಇದೆ. I have gone through those in the class also and made you mark the important adjustments, right? Go through the problem once, and then if you have time then solve it. That is better. At least one problem for each sector you can solve, nothing like it. But compulsory what you can't miss, I told you, transportation industry, toll plaza problem, you solve it on your own. The other ones at least go through the format. Then even hospitality industry or hotel industry is also one of the frequently asked questions. Hotel industry also is one of the frequently asked questions. So if you ask me to rank it, first is always transportation industry. Most frequent last question it is. After that, it could be your hotel one, that is room tariff related one. That could be the one. Toll plaza also, off late they've asked couple of times toll plaza one, and then obviously they can ask anything. It can come from healthcare or it can come from education, any of the other problem. But they're very simple. If you have read it, it's very simple. You can understand it if you go to the study materials. Clear all of you? Yes. Shall we go to the revision material? Open the revision material theory portion of service costing. Yes. Read the problem.
Service costing or operating costing. Cost of operating a service. Cost unit. Operating costing has two different cost units. First one, simple or single unit, that is only one unit of measurement. Second one, composite unit, 2 units of measurement. Composite unit. Absolute unit, example distance traveled into tons. Commercial unit, example average load into total distance covered. Computation of cost of operating of service. Particulars, total and per unit. First one, standing cost, rent of garage, driver's salary. Semi-fixed cost, running or variable cost, repairs and maintenance, fuel or petrol, cost of operating a service. Add profit, then we get sales or takings or fare. Multiple costing. The method of costing followed by a business wherein a large variety of articles are produced. Cost of each article is computed separately by using two or more methods of costing. Example, building involves contract costing for construction, service costing for
Indeed.
interiors.
Okay, this is a simple example. So if you see total kilometers, single route distance into number of trips in a day into number of days, you get the total kilometers. Very important. Whenever you're finding out passenger kilometers or ton kilometers, first find out the kilometers separately and then multiply tons or passengers. I've told this multiple times because kilometers will be required for calculating the variable cost of running the machine. Diesel, petrol, all of that will come. Clear? Next, total passenger, right? Total kilometers into average passenger for each trip is used. So multiply that, you will get passenger kilometer. This is one more very frequently asked adjustment: computation of total ticket fare and commission. Right? Let sales equals to X, where X will be total cost. So what would have happened is you would have prepared the service cost statement. This is how normally it works. Service cost statement you would be preparing, all of you. You would know figures until a certain point of time. Is it clear, all of you? Then two or three figures will be missing, and they will normally be as a percentage of sales. They will normally be as a percentage of sales. Is it clear? For example, takings, the commission and all of that could be as a percentage of sales. So that you will put as, say, 3% of X, 4% of X, or whatever. Understood, all of you? So since all other remainder figures are X, you can form an equation and find out what X is. Clear? You can form an equation and find out what X is. So similarly it is done here. Let sales equals to X, then X is equals to total cost, then commission, profit, right? You have to add, and then excluding commission. So here 57 for this is the cost of the table. I think this is fixed cost, this would be variable, this is maintenance. Artha aita? Fixed variable maintenance excluding the commission. Then 10% is profit, 15% is commission. Find out what X is. Artha aita, all of you. Yes, since only X is there, you can form an equation and find what X is. So sales is so much, therefore total profit you found out and commission. Yes, so this is a format, that's how it looks like. Create operating cost statement on annual basis, very important, the period. Then computation of base fare per passenger per kilometer. Passenger kilometers we normally write on top, right? 14,40,000 based on working note number 1. Particulars, workings, total cost and per unit cost. So we find out what the fixed cost is, standing charges, and then running cost or variable cost, right? After that, maintenance charges. This is the standard format of service costing. Yes, now come to your RTP. Yes, look at this problem, all of you. Yeah, read the problem.
Fit and Fine Limited runs a fitness club in Delhi. It offers three types of membership plans: bronze, silver, and gold. The club is using a traditional costing system with the following information: cost information, description and amount in rupees, rent, gym equipments, licenses and permits, insurance, salary to the instructors, utilities, cleaning supplies, AMC of equipments and machinery, marketing expenses, electricity expenses at rupees 14 per unit. Membership details: type of members, gold, silver, bronze. Club access time, occupancy in percentage from April to July, occupancy in percentage from August to March. The maximum capacity of the fitness club is 200 persons in any time slot. The membership fee per month for gold members is to be fixed at 1.5 times of silver membership, and that of silver membership as twice of the bronze membership fee, after providing profit at 25% on membership fees. The club opens 25 days in a month. You are required to calculate the membership fee per month to be charged by the club for each member type. Sir, you're muted. You're muted, sir.
Yes. So look at this. Fit and Fine Limited runs a fitness club in Delhi. It offers three types of membership plans, right? Bronze, silver, gold. Clear? Three types of plans are there. Then she has anyway read all of this, so this I will not say. But what is important here? So this is per month. Note that down. Service life 5 years. Okay. Be careful here. Okay, this is 5 years. This is 6 months. Can you see this, all of you? Renewed in every 6 months. Then per annum, per quarter. Again important. Then per month. Okay, April to July. Then August to March. So you see this. They are only playing with period. This is what I told. This is what I told. In service costing, most important thing, period. Right? So club access time they've given, occupancy percentage. Right? Occupancy percentage August to March. So 200% is the maximum capacity. 25 days in a month it is open. Profit is at 25%. Then equivalent units K, they've given here, look at this. The membership fee per month for gold members is to be fixed at 1.5 times of silver. Therefore, gold is equals to 1.5 silver. Then, and that of silver membership as twice of the bronze membership. Therefore, silver membership is equals to 2 times bronze membership. That means gold would be how many times bronze? 2 into 1.5 times. So everything in terms of bronze membership, if you have to say, gold is 2 into 1.5 times, then silver is 2 times bronze, and gold is 1.5 times of silver. This is what you have to note down. Either this is important. Did you all understand this question, all of you? Question artha aita will go through the problem. Answer will go through. Question, I hope everybody understood. Yes?
Yes.
Yes? All right. Yes, look at this now. Statement showing total cost per annum, right? Everything is on per annum basis, so everything converted to per annum. Understood? But this is not suggested. Please make it like standing charges separate compulsorily. I don't care what is there in the RTP. Standing separate, all of you. Yes. Then variable separate and then maintenance. Iday format follow madi. Is it clear, everyone?
Yes.
You have to compulsory follow this. Then total cost per annum, add profit charged, and then you do it. Okay. Calculation of per member per month subscription charges. Total amount to be charged is 98 lakh 40,000. Equivalent. Look at this. I told you everything is in terms of bronze membership. Yes, everybody. How we got equivalent? So there'll be a working note, I'm sure. Yes. Equivalent membership, I told you, gold is 3 times of bronze, silver is 2 times, and then bronze is 1 time. Understood? How this has come based on occupancy. Gold is 200%, then 200, 140, 100. Either basis money 200, 140, 100. You got what is the equivalent, units. Artha membership. Same way August to March is done. Right? They added up total and you got 9840. Right? That's it. That is the most important thing. Last step. This is service costing. And now, one of the most important chapters. Sit straight, everybody. The most important chapters, not just for costing, right? Not just because you have to see the direct marks. Indirect again, throughout the costing paper, you have adjustments from margin costing. Also, some of it comes in FM. Okay. Therefore, extremely important. Sit straight off. Marginal cost or variable, it's also called variable costing. Marginal costing, also called variable costing. What is marginal cost or variable cost? The cost saved or cost incurred by producing or not producing an additional unit. Right? The cost incurred or cost saved by producing or not producing an additional unit. That is nothing but marginal cost. Is this clear, all of you? Right? The most important thing, Rikita, marginal costing, also called variable costing, because the entire thing is based on variable costing. Clear, all of you? Yes? Why variable costing? Right? Here, the classification of cost is based on what? Classification of cost is based on what? Is it element wise classification, function wise classification? What is the classification of cost? Behavior wise classification of cost, right? You classify the cost as fixed cost and variable cost. Here you're not bothered whether it is direct, indirect. No, we're only bothered about whether it is fixed or variable. Understood? Therefore, variable cost will have both direct as well as indirect. Fixed cost may have both direct as well as indirect. But normally, variable cost will be direct, then fixed cost will be indirect normally. But there could be some indirect costs which are variable and some direct costs which are fixed. Clear? Right? Yes. In this, like I said, the classification of cost, Pranav, is based on fixed and variable cost. Correct, all of you? Therefore, what is the fundamental equation for calculating the of margin costing? Fundamental equation. Yes, tell me.
Sales minus variable.
Variable cost is equal to contribution is equal to fixed cost plus profit.
Plus profit. Sales minus variable cost is contribution, which is equals to Priya fixed cost plus profit. Correct? where LHS is normally within the control of the management, RHS is normally not within the control of management. The only two ways, right, as per this equation, the two ways to increase profit is to increase the sales. That is normally the number of sales units. Sales price, we don't say. Normally, the sales is increased by increasing the sales units. How can you increase sales units? It could be by providing better quality, by marketing, etc. Understood, all of you? Yes, so increase the sales units at the same time controlling the cost. Controlling the cost. Clear? Variable cost. You get contribution, which is equals to fixed cost plus profit. Fixed cost is already sunk in nature, it's already committed cost. Clear, all of you? You have committed it, it is sunk in nature, therefore not relevant for decision making. Profit is a balancing figure. Profit is a balancing figure. Clear? Right? Therefore, sales minus variable cost is contribution, which is equal to fixed cost plus profit. So if I have to define or if I have to word what is contribution, it is the amount earned over and above the variable cost to cover the fixed cost and profit. Amount earned over and above the variable cost to cover the fixed cost and profit. Is this clear? Yes, Inchara? Correct? That is my fundamental equation of margin of costing. Right? Next. The other equations, right? In that, the most important thing is the profit volume ratio. Any given question, right? Even if the question does not ask you to compute, especially ratios, especially the formula driven questions. Even if the question does not ask you to compute, you please compute what will be the contribution per unit and the PVR. Clear? Contribution per unit and the PVR that you compute because it will be used somewhere or the other. Now, what is profit volume ratio? Contribution by sales into 100. Right? Profit volume ratio is contribution by sales into 100. There are different formulas for calculating the same PVR. Right? If 2 years data is given, then change in contribution divided by change in units into 100. Change in contribution, right, is also PVR itself. Change in contribution by change in sales into 100. Understood? Change in contribution by change in sales into 100 is also profit volume ratio. Now, change in contribution and fixed cost will get eliminated. Therefore, if fixed cost is eliminated from contribution, what is left is nothing but profit. Therefore, change in profit by change in sales into 100 is also contribution. 1 minus variable cost percentage is also contribution. Clear? 1 minus variable cost percentage is also contribution. Right? That is my PVR. PVR. Right? 1 minus variable cost percentage is PVR. So I repeat, what are the formulas? PVR, first one, contribution by sales into 100. Second, change in contribution by change in sales into 100. Third, change in profit by change in sales into 100. Fourth, 1 minus variable cost percentage. All of this will give me PVR. Is this clear? Right? Next, break even sales. Break even sales. It is that level of sales at which, yes, now you can complete the statement. At which sales equal to total cost, at which profit equal to 0, right? At which fixed cost equals to, at which fixed cost equals to
Contribution.
contribution, because profit is 0, so obviously fixed cost is contribution. Understood? So therefore, the same PVR formula I can use to calculate break-even sales. That is, instead of contribution, I will say fixed cost, because at break-even sales, contribution equal to fixed cost. Therefore, fixed cost divided by PVR will give me break-even sales in value. Break-even sales in value. Break-even sales in units, Priya. Break-even sales in units is what? Fixed cost divided by contribution per unit. Fixed cost divided by contribution per unit. This is my break-even sales in units. All of you understood? Next,
Yes.
margin of safety. Margin of safety. It is the sales achieved over and above the break-even sales. Sales achieved over and above the break-even sales is margin of safety. Therefore, formula is actual sales or total sales minus break-even sales. Actual sales or total sales minus actual sales or total sales minus break-even sales is my margin of safety. The other formula to compute is profit by PVR. Profit by PVR. Understood? Sir, why profit? Because break-even sales contribution is fixed cost. Margin of safety, the contribution is profit. Understood? Therefore, profit divided by PVR will give you margin of safety. Then there are a lot of formulas, but one of the last formulas is sales at X profit. How do I determine what is the sales at X profit? Yes, same formula of PVR, fixed cost plus X profit divided by PVR, or fixed cost plus X profit divided by contribution per unit. This is the sales at X profit formula. Understood? Right? So these formulas has to be applied now. But what is the fundamental principle? The principle is again based on behavior wise classification. So total fixed cost remains fixed in total, variable cost remains fixed per unit. Fixed cost remains fixed in total, variable cost remains fixed per unit. Understood? Per unit or variable cost varies in total. Simple. Based on this only, the entire framework is built. Yes, the entire framework is built. So with every change in unit, variable cost will change, whereas fixed cost will remain same, because of which the profit percentage should increase. Because of which the profit percentage should increase. This is the whole concept of marginal costing. Understood? Yes. So with that, now let us go through the CAPS material. Yes, read the problem. Sorry, read the material.
Marginal costing. Marginal cost means cost incurred or saved by producing or not producing a unit. Marginal costing equals variable cost equals prime cost plus variable overheads. Fixed,
Important. Variable cost includes both prime cost as well as variable overhead. Yes.
fixed cost should always be expressed in total.
Per unit ನೋಡಿದ ತಕ್ಷಣ if you see per unit immediately convert total fixed overheads fixed cost. What is the formula? Budgeted fixed cost per unit into budgeted overhead units. ಅಲ್ಲಿ ಬರ್ಕೊಡಿ budgeted fixed cost per unit into budgeted units. Budgeted fixed cost per unit into budgeted units. That is fixed cost. Yes, continue.
BEP, that level of sales at which sales equals cost. Absorption costing versus marginal costing. Absorption costing is a method of costing wherein all the costs, both fixed and variable, are absorbed by the product based on certain absorption rates. Marginal costing is a method of costing wherein only variable costs or marginal costs are considered while determining the cost of a product. Key factor or limiting factor. A factor of production which limits the number of units to be produced and sold. Normally, sales is the limiting factor except in monopoly industry. Decision making in key or limiting factor. Sales. Choose the products having highest contribution per unit. Any other? Choose the products having highest contribution per limiting factor.
Okay, concentrate on all of you. Very simple. Whenever sales is the implied limiting factor, only sales is the limiting factor. That means you find out what is the cost per product and rank the products based on the contribution per product. Okay, contribution per product, and then accordingly take a call. Is it clear? So based on product level contribution per unit you find out and then do it. Contribution per unit you find out and then rank it based on that, and then you will decide which product to be sold first. Is it clear? But however, if any other limiting factor is there other than sales, then you have to find out what is the contribution per limiting factor, not per unit, per limiting factor, and then rank it based on the contribution per limiting factor, and accordingly decide which unit has to be sold first. Is it clear? Yes. Next.
Cost volume profit analysis. The impact of cost and volume on the ultimate profitability of company, that is maximizing the sales, reducing the cost. Cost, relevance and their reasons. Historical cost, irrelevant. The cost has already been incurred and do not affect the decision. Example, book value of machinery, etc. Sunk cost, irrelevant. The cost which are already paid either for goods or services availed or to be availed. Example, raw material purchased and held in store without having replacement cost, cost of drawing, blueprint, etc. Committed cost, irrelevant. The committed costs are the pre-agreed cost which cannot be revoked under the normal circumstances. This is also sunk cost. Examples: cost of materials as per rate agreement, salary cost to employees, etc. Opportunity cost. Relevant. The opportunity cost is represented by the foregone potential benefit from the best rejected course of action. Had the option under consideration not chosen, the benefit would come to the organization. Notional or imputed cost. Relevant. Notional costs are relevant for the decision making only if company is actually foregoing benefits by employing its resources to alternative course of action. For example, notional interest on internally generated fund is treated as relevant notional cost only if company could earn interest from it. Shutdown cost. Relevant. When an organization suspends its manufacturing operations, certain fixed expenses can be avoided and certain extra fixed expenses may be incurred depending upon the nature of the industry. By closing down the manufacturing, the organization will save variable cost of production as well as some discretionary fixed costs. This particular discretionary cost is known as shutdown cost. Marginal costing versus absorption costing. Marginal costing. Only variable costs are considered for product costing and inventory valuation. Absorption costing, both fixed and variable costs considered for product cost and inventory valuation. Fixed costs are regarded as period costs. The profitability of different products is judged by their PV ratio. Fixed costs are charged to the cost of production. Each product bears a reasonable share of fixed cost and thus the profitability of a product is influenced by the apportionment of fixed cost. Cost data presented highlight the total contribution of each product. Cost data are presented in conventional pattern. Net profit of each product is determined after subtracting fixed cost along with their variable cost. The difference in the magnitude of opening stock and closing stock does not affect the unit cost of production. The difference in the magnitude of opening stock and closing stock affects the unit cost of production due to the impact of related fixed cost.
Impact.
Impact of related fixed cost. In case of marginal costing, the cost per unit remains the same, irrespective of the production as is valued at variable cost. In case of absorption costing, the cost per unit reduces the production, increases as it is fixed cost which reduces, whereas the variable cost remains the same per unit. Basic formulae: sales minus variable cost equals fixed cost plus or minus profit or loss. By multiplying and dividing LHS by S into S minus B by S equals F plus P. S into PV ratio equals F plus P or contribution, that is PV ratio equals S minus V divided by S. BS into PV ratio equals F at BEP profit is 0. BS fixed cost by PV ratio. PV ratio fixed cost by BS. S into PV ratio equals contribution, refer to point number 3. S into PV ratio equals contribution by sales. BS plus MS into PV ratio equals contribution, that is total sales equals BS plus MS. BS into PV ratio plus MS into PV ratio equals F plus P. By deducting BS into PV ratio from LHS and F from RHS in 10 above, we get MS into PV ratio equals P. PV ratio equals change in profit divided by change in sales. PV ratio equals change in contribution by change in sales. Profitability equals contribution by key factor. Margin of safety: total sales minus BS or profit by PVR. BS: total sales minus MS. MOS ratio: total sales minus BS divided by total sales. Effect of some independent situations on the PV ratio. Situation, PV ratio and their reasons. An increase in the physical sales volume will not change. PVR will not change. The ratio of sales value and variable cost will remain same irrespective of change in sales volume. An increase in the fixed cost, PVR will not change. Fixed cost is not considered in calculation of PV ratio. A 10% decrease in both selling price and variable cost per unit, PVR will not change. The decrease in selling price and variable cost by the same ratio will not change the PV ratio. A 10% increase in the selling price per unit and 10% decrease in the physical sales volume, PVR will increase. The increase in selling price will increase the contribution margin, but the change in sales volume in any direction will not affect PV ratio. Thus, increase in selling price with decrease in sales volume will increase the PV ratio. A 50% increase in the variable cost per unit and 50% decrease in the fixed cost, PVR will decrease. The increase in variable cost reduces the contribution margin, thus decreases the PV ratio. Increase or decrease in fixed cost will not affect the PV ratio. An increase in the angle of incidence, PVR will change. Increase in angle of incidence means increase in rate of profit earning, which is nothing but the PVR that contributes towards the profitability after recovering the fixed cost.
Yes. Here, in terms of problems, it's straight all of you. Make or buy, export, right? Or acceptance of special order. All of this I've done in the class. Remember all of you? Make or buy, then acceptance of special order. These problems were there earlier in the study material but deleted. However, they are asked in the examination, so be careful. Write that down. Okay. Next comes your cost indifference point. What is cost indifference point? Yes, very simple concept. There'll be two different versions given. Clear all of you? Two different models. In one case, the fixed cost is high, variable cost is less. In the other case, variable cost will be less, but the variable cost is more, but fixed cost is less. Understood? Example could be of a machine, semi-automatic machine, automatic machine, and fully automatic machine. Semi-automatic machine, capital introduction will be less, because of which depreciation will be less, because of which fixed cost is less. Understood? Right? However, variable cost is high because you need more manual intervention, more manual labor. Artha aita. Second option, high or fully automatic machine will require high capital investment, therefore high fixed cost because depreciation is high. Repairs also could be high. Clear, everybody? Yes, high fixed cost. However, variable cost will be less because labor cost will be less since it is fully automatic. Is this clear? Now, question is who should go for what option? At the initial stages of a business or of a startup, initial stages where you're not making much revenue or more than revenue, not making much profits. In that case, you want your fixed cost to be as less as possible, correct or not? Otherwise, you'll go into losses. Is this clear? Fixed cost should be as less as possible means it will be semi-automatic machine, right? In my example, understood? So if your production is less than the cost indifference point, then you'll go with the alternative which has dash less,
Fixed cost.
which has lesser fixed cost. Understood all of you? However, if your production is more than the cost indifference point, then you'll go with which alternative?
Variable cost is less.
Lower
Variable cost.
variable cost. Lower variable cost. Understood? That is cost indifference point. Next comes shutdown point. For shutdown point, you will use discretionary fixed cost or avoidable fixed cost. Understood? Avoidable fixed cost, again, for sales, it's always the same formula divided by PVR or contribution per unit. That is my shutdown point. Is this clear? So if your number of units is more than shutdown point, then you don't have to shut down. If it is less than the shutdown point, then it is suggested to temporarily shut down. If you remember the words, temporarily, you will advise them to shut down. Understood? Right? And then coming to your limiting factor problems, and the limiting factor, multi-limiting factor problems. Again, important. Done in institute, there's one illustration on the institute study material. Kindly go through the same. Right? Multiple limiting factors you have. Right? So, sir, how do I identify if there are multiple factors? How do I identify one of them is a limit? Which one is a limiting factor? So, find out what is the maximum number of units you can produce from the given available resource. Understood? Yes. Yeah. Anything else? Right? These are the important points of marginal costing. Then obviously formula. Entire thing is based on formulas. Okay, all of you. Yes. Let us quickly go through the your recent RTP. Come to RTP. For a different category of problems and the important problems of a revision material, last time I have done it. Yes or no? I've gone through the doing R2E session. Adike nan ಈಗ I'm focusing mainly on RTP and then one suggested answers ಎಲ್ಲ ಪ್ರಾಬ್ಲಮ್ ಒಂದ್ಸತಿ go through ಮಾಡೋಣ. ಆಯ್ತಾ? go through ಮಾಡ್ಕೊಂಡು ಆದಷ್ಟು we will solve. Right? We'll solve it as much as possible. But these things are more important. Which one? Your empty RTP, because I've not done last time. That is why I want to compulsory go through each and every RTP question. That is the approach I'm following. Your revision material, though, questions we have actually gone through last time. Just once a glance, Marna. This time also I will glance. For anyway, in the last class, till overheads, we have glanced through it. Clear? Ega service costing and margin costing together we'll just glance through, but I don't want to focus more because last time na ಮಾಡಿದೀನಿ. Hopefully you will be able to do those problems on your own. They are also important, right? But your related examination RTP I have not done. That's why I'm doing. And then I want to do one suggested answer, right? So September 25 suggested answers we will go through. Okay? Yes. Now come to RTP, margin costing. Yes, margin costing. Come to the case scenario. I think this is margin costing. Yes. PV ratio. Profit or loss from the proposal would be. Yes. Let's read this question. Read the problem. Case scenario 2.
White Collars Private Limited is a company engaged solely in the manufacture of shirts, which are bought mainly by office goers. Currently, the company sells its products directly to the retailers. In the recent years, sales has steadily declined due to rising competition. The forecast for next year suggests that the current decline in profits is expected to persist. The management believes that a profit of rupees 60 lakh is necessary to ensure an adequate return on capital. Thus, it asked the marketing director to review the marketing policies. Now, the marketing director submits the following profit and loss account for the last year along with 3 proposals available with him. Particulars amount in thousands. Sales revenue 50,000 shirts at rupees 1,500 each. Factory cost of goods sold, direct material, direct labor, variable factory overheads, fixed administration overhead, selling and distribution overhead, sales commission 2% of sales, delivery costs available per unit sold, variable per unit sold, fixed costs and profits. Proposals for upcoming year. 10% reduction in selling price, which may increase demand by 40%. Selling of 25,000 units to eFlip, an online platform selling products directly to customers at a particular price. eFlip would transport the shirts from White Collars Private Limited to its own warehouse, thus abolishing the delivery costs and sales commission to be paid for each sale by White Collars Private Limited. However, if a suitable price is negotiated, White Collars Private Limited would contribute rupees 45 lakh annually towards the online order catalog cost and provide special packaging at rupees 75 per shirt. Remaining units of 25,000 would continue to be sold at rupees 1,500 each as per existing business. 10% price reduction together with an advertising campaign costing 22,50,000, which may boost sales by 60%. From the information given above, you are required to figure out the following of managerial decisions. PV ratio and break-even sales in value based on last year accounts would be profit or loss from proposal 1 would be, with respect to proposal 1, how many number of units White Collars Private Limited would need to sell at rupees 1,350 each to earn a desired profit of rupees 60 lakh? With respect to proposal 2, how much selling price per unit be offered to E-Flip that would at least break even on this proposal? Profit or loss from proposal 3 would be
Yes, so this is the question, all of you. Okay, now look at the first one. Right? So here they've given, see, I have marked it. This is variable cost. This is fixed cost. This is again 2% of sales. So this is variable cost. This is variable in nature and this is fixed cost. Clear all of you? Yes. Sales revenue is given at rupees 1,500 each. Therefore, find out what the total variable cost is. Arthak idea per unit. And then find what the variable cost per unit is. And then find out what the contribution is. Sales minus variable cost. Right? It believes that a profit of 60 lakh is necessary to ensure an adequate return on capital. Therefore, this is my desired. Right? Thus, if asked the marketing director to review the marketing policy, it is asked for him to review the marketing policy. 3 proposals are available with him. Right? These are the 3 proposals. 10% reduction in selling price. Is it clear, all of you? Second one, selling of 25,000 units to E-Flip and online platform selling. Right? The abolishing the delivery cost, sales commission to be paid, etc., etc. However, if suitable price is negotiated, then it would contribute 45 lakh annually towards online order catalog cost and provide special packaging of rupees 75 per shirt. The remaining units of 25,000 could be sold at 1,500 each per existing customer. Last one, 10% price reduction together with an advertising campaign. The first one, there's no advertising campaign. Second one, there's an advertising campaign. And then they've asked what is PV ratio, etc. Yes. Okay, look at this now. Yes. Sales revenue. So sales minus all the variable costs. Same thing what I have done here. All of you. Yes, no. Whatever I've marked as variable, they have taken as variable. These 3, then sales commission, then delivery cost. 3 plus sales commission, delivery cost, variable cost, and then contribution. Easy. Yes. Then fixed cost calculation. There is nothing but all the others. Fixed factory overheads, administration overheads, and then fixed cost. Add all these 3 things. Right? Factory overhead, administration overheads, and then fixed cost, total fixed cost. Clear, all of you? PV ratio is contribution by sales into 100. Contribution is already calculated 31,500. Sales they have given 75,000. Therefore, we get 42%. Break even sales, fixed cost by PV ratio. Simple. Right? Next. Number 2. Yes. So the revised selling price, you're reducing by 10%. Understood, all of you? 1,500 minus 10% you have reduced. Variable costs. Will the variable cost change with the change in selling price? Yes or no? Will the variable cost change with the change in selling price? Tell me quickly yes or no. Selling price change agoga, variable cost change agutta?
No, sir.
No, how will
No,
the
sir.
variable cost change? Right? The variable cost will remain same. So the variable cost is calculated here and then contribution per unit you get 483. Number of units sold is 70,000. Right? Total contribution 3.38 lakhs. 3.38 crores minus 3 crores. 38 lakh 10,000 is the profit from the proposal. Next. Last one, 10% of selling price reduction together with advertisement campaign of 22.5 lakh. Right? So the desired profit is fixed cost plus profit. Okay. That is done on a per unit basis. Clear? Per unit basis only you do it and then you will get what are the desired units. Last one. Last one is with respect to proposal, how much selling price per unit should be offered to E-flip? With at least break even on this proposal. So break even you have to find out. So that is variable cost of selling to E-flip. What is the additional cost? All of you concentrate now. They've told delivery expenses, sales commission, barala anta they have given in the question. Is it clear? However, additionally, additional packaging cost has to be incurred. Therefore, find out what the revised variable cost equals to. Is it clear, all of you? 840. Therefore, break even point 25,000 units. They have only given agreed, not agreed. What have they given here? Yes. Allah, that break even point. Yes. In value, it is done here. Okay. Total variable cost. This is all easy. Fixed cost. Right. So 25,000 units. Adanna, he'll divide Madi. They found out what the contribution per unit is. From contribution per unit, they added the variable cost and arrived at what the selling price per unit is. Okay. Now, selling off, they have only given here very simple 25,000 units to E-flip, right? So that is why find out what the, if break-even point is 25,000, therefore what is the selling price to achieve that break-even point? Yes or no? Yes. Next. Right? All of you concentrate now. Sir, why break-even point? When you're selling to E-flip, I should ensure that from there, I should not make any loss. Correct or not? From E-flip, I should not make any loss. From the additional sales units, anyway, I'm going to make profit. Clear, all of you? From the additional sales units of 25,000, I'll anyway make profit. So E-flip the 25,000, though they have found out what the break-even. Considering this 25,000 to be break-even, right? What should be the selling price? That is how it is calculated. Yes. So 25,000 units is sold to E-flip. 45 lakh is my fixed cost. Therefore, what should be the contribution per unit? 180. Variable cost we know is 840. Therefore, selling price has to be invariably be 1020 per unit. Artha ita point of all of you. Yes. Next. Question number 5. Profit or loss from the proposal 3 would be. Proposal 3 is basically this last one, 10% price reduction together with advertisement campaign. Right? So contribution per unit similar to 1, 483. Number of units sold 80,000. Yes. Proposal 3, all of you look at this. 10% price reduction together with advertising campaign costing, which may boost the sales by 60%. Can you see this, all of you? They're saying that the sales will increase by 60%. Right? So that is why applying that 60% is what 80,000 is arrived at. Clear, all of you? Yes. So Ilbariri, make a note how this 80,000 has come. Current 50,000 into 1.6 equals to 80,000. So 80,000 units into 483 is the total contribution, right? That is here. From this minus fixed cost, and then you'll arrive at profit. That's it. Okay, this is the margin costing problem. Sir, which are the problems to be solved in margin costing? Everything is important, but some of the critical problems, write down, is the multi-factor limiting factor problem. Note that down. Multi-limiting factor problem. Don't miss that. Then cost indifference point, shutdown point, make or buy, special order. Special order only you have to ensure that the at least variable cost is met. Artha aita. Minimum variable cost should be met. Right? Then I told you multi-key factor, limiting factor problems you should not miss. And then you can go through the formula based problems what I've done in the class. And obviously, please go through all the study materials, RTP, MTP, and all of them. What that is your revision material. What is there? Clear all of you? Yes. That is my marginal costing. Is it clear? Everyone understood?
Yes.
Yes, sir.
All right. Next. Sit straight. Yes. You want a break now or later? Yeah, Beka. First, I will give later because it is going to be lengthy. I have to do uh, budgetary control. Obviously, I'll do budgetary control and joint products. I'll focus. So, budgetary control joint products will go through even the revision material also because I've not done that during the R2E session. Clear? After that, I want to do the theory portions, some of the theory parts of introduction chapter and all that I need to brush up, and then we'll go through the theory of all the entire revision material. Vansati will glance and suggested answer I want to do. This much I want to cover. Okay. Yes. Want break now or later? What do you want? Later? Kirtana. ಏನೇ ಈಗ ಬೇಕಾ ಆಮೇಲೆ ಬೇಕಾ? You decide.
No, sir, you decide.
Okay. Then we'll do it later. Sit straight, all of you. Yes. Let us finish. Next one, that is budgetary control. Sit straight. Most important, one more thing, marginal costing all adu bareri. Marginal costing versus absorption costing. Marginal costing versus absorption costing. Then important adjustment is what? Margin costing always based on variable cost. Absorption costing based on total cost, including fixed cost per unit. Clear? So obviously you'll get over absorption, under absorption. Ali, important point, over absorption, under absorption, normally based on production units. Normally based on production units, you'll do over absorption, under absorption. After adjusting whatever profit you get, still there'll be reconciliation different. This reconciliation is difference is due to what? The reconciliation difference between marginal costing and absorption costing, the profits will not match because of what?
Opening stock.
Opening stock, closing stock. Opening stock, closing stock. Clear? Right? In absorption costing, closing stock will be valued on total cost. Whereas in marginal costing, it will be valued at variable cost. So you will arrive at, and the flow, what is the starting point, what is the ending point? Yes. So for reconciliation, what did I tell you? Start from where and end where?
Start with marginal costing. And
Very good. Start with marginal costing, end at absorption costing. Therefore, you will add closing stock, you will minus opening stock. Very simple. Closing stock is like income, opening stock is like expense, so you will minus to arrive at absorption costing. This is another important problem that you have to do. Okay. All right. The next chapter, Budget and budgetary control. Sit straight. A budget is a statement of estimation prepared and approved during a defined period of time of the policy to be pursued during that period of time to attain a particular objective. So it is prepared prior to a defined period of time for the policy to be pursued for achieving a given objective during that period of time. Understood? In simple terms, it is an estimation prepared before the costing period, right? And it should be in line with the objectives. It should be in line with the objectives. You cannot prepare a budget whatever you want. There will be a given objective, there will be a goal that you want to achieve. It should be in line with that. Is it understood? That is my budget. A budget can be prepared for each and every item of the balance sheet or P&L, not just P&L, but each and every item of the balance sheet and P&L individually also on a master level. Understood? Therefore, classification of budgets or the different types of budget. First one is called capacity budget. That is, there are two different types, fixed and flexible. Tanya, Bharat, Sayyad, Nikhil, videos on. There are two different types, fixed and flexible. Fixed budget, sit straight, prepared for a particular number of units only one, either at 80% or at 70% or at 40%. Clear? That is fixed. Flexible for different level capacity levels at 50%, at 60%, and at 70%. That is called flexible budget. Understood? Sir, where is it important? If you have a very predictable business, then fixed is okay. But if you have seasonality, if you have different, sales units, and it is not that predictable, then it is better to do flexible budget. Understood? Why? Because when you are comparing the actual with the budget, it should be on a realistic basis on the same capacity utilization. If your actual capacity utilization is 60%, you cannot compare with the budget which is prepared for 100% capacity utilization. Is this clear? Right? Therefore, a flexible budget is always suggested. This is based on capacity. Next, based on conditions, your basic and current. Basic and current. Basic is normally a long-term budget. Long-term budget, it does not consider the micro, your macro level factors, only micro. Understood? Within the organization, whatever it is, that is what I consider. Outside or external factors, macro level factors, not considered, because for long term it is difficult to predict. However, your current budget, short term current budget, the current budget or short term budget will consider even the macroeconomic and external factors. Is this clear? Right? So, based on conditions, based on coverage, functional budget and master budget. Functional budget, you remember the function and the cost sheet, right? For sales and product sales, one budget you can prepare. Production, one budget you can prepare. Like that, for each function, a separate budget is prepared. Understood? And then an overall budget is prepared, that is called master budget. Artha aita. This is based on coverage. Based on period, you have short term and long term again. Based on period, you have short term and long term again. The twin important objectives of budgetary control and stand costing are what? Twin important objectives of budgetary control and stand costing are what? Yes, planning and control. Don't forget those two terms. Planning and control. Clear? Everyone? Always, first you plan. But why are you planning? To control. Don't forget that. You're planning the budget. Your predetermined rates for standard costing. You're planning it. But for what? To control. Therefore, planning and control are the two important objectives of budgetary control. Under the types of budget, you have one more thing called as zero-based budget. That is to start from scratch, not based on some historical data. From the start, you will do R&D and then prepare the budget. That is called zero-based budgeting. Is this clear? All of you? And then you have your budgetary ratios. So, actual usage of budgeted capacity ratio. I think this will go through from the material. Open the material, all of you. Budgetary control, page number 89. Page number 89. Yes, read.
Budget and budgetary control. Budget means a financial and or quantitative statement prepared and approved prior to the defined period of time of the policy to be pursued during that period for the purpose of attaining a given objective.
Albari, it's a statement of estimation. It's an estimation. Let's continue.
Types of budget: basis, name, and description. Basis: capacity. Fixed: prepared for a predetermined level of activity. Flexible: different levels of activity. Segregate cost into variable, fixed, semi-variable. Example for semi-variable. For semi-variable, units 1 lakh cost 20 lakh, units 2 lakh then cost 30 lakh. Variable cost per unit is 30 lakh minus 20 lakh divided by 1 lakh equals rupees 10 per unit. Fixed cost included 30 lakh minus 2 lakh into 10 equals 10 lakh. Conditions: basic remains unaltered. Current alters frequently. Coverage: functional, sales, production, etc. almost all functions of the organization. Master or summary budgeted balance sheet and budgeted P&L account. Period: long term or short term. Cash budget. The twin important objectives of budgetary control and standard costing are planning and controlling. Zero-based budget. Budget is started from the scratch. Zero-based budgeting, it means a budget which is prepared by taking each and every component of the budget and carrying out scientific research and analysis for estimating the figures. Budget ratios. Capacity ratio. Actual working hours divided by budgeted working hours into 100. Activity ratio. Standard hours for actual production by budgeted hours into 100. Efficiency ratio. Standard hours for actual production by actual hours into 100.
Always start with this. It's very easy to remember. Efficiency ratio standard by actual. Correct. Standard means what? Say for a particular activity or for a particular product, it takes 1 hour to develop. Okay. You have taken say 2 hours. You have taken 2 hours. So actual. That means you're efficient or inefficient. You are inefficient. Correct. And here, therefore, actual hours will be the denominator. This will be the numerator. You are 50% efficient. That is efficiency ratio. Simple. Standard by actual. Ulta. If standard is 2 hours, you have taken 1 hour, right? Therefore, 2 divided by 1, 200%. Okay? Yes, ma'am. Continue.
Capacity usage ratio. Budgeted number of working hours.
Standard capacity usage ratio. Yes.
Standard capacity usage ratio. Budgeted number of working hours by maximum possible number of working hours in a budget period into 100. Calendar ratio. Actual working days by budgeted working days into 100. Standard capacity usage ratio.
Actual capacity usage ratio. Actual hours worked by maximum possible hours in a period into 100. Yes. Therefore, ACE, that is one alternate, it is always A, B illa, C, D illa, E. A is equals to C into E. Activity ratio is equals to capacity ratio into efficiency ratio. When I say capacity ratio, it is my actual usage of budgeted capacity ratio. Okay. Statement of comparative profitability, flexible budget, all of you see different one. Again here, sir, what is the format to be followed? Marginal costing format. That is your behavior based classification of cost. Behavior based classification of cost. Total contribution, then fixed overheads. Again, fixed overheads always budgeted fixed cost per unit into budgeted units. Okay. Budgeted fixed cost per unit into budgeted units. Is it clear, all of you? Yes. Next. Come to RTP. We look at this one more margin costing. In 2 consecutive quarters, a company reported the following performance. Quarter 1 sales was 2,10,000 with a profit of 12,000, while quarter 2 sales rose to 2,40,000 with a profit of 24,000. What is the feeling? Let's not read ahead. What is the feeling here? What is the feeling? ನೋಡಿದ ತಕ್ಷಣ change in profit divided by change in sales will give me what? PVR. Right? Assume that the fixed costs remained constant across both quarters and that the company did not introduce any new product lines. Assume PV ratio. Look at this. That's all. I didn't even read the question, but we were able to identify. First step. Next. In a chemical processing unit, materials added. Okay, this is process costing, FIFO method. Product cost will go, joint cost we'll see later. Material, employee, overheads is done, ABC is done. Cost sheet, cost accounting system, job and batch costing. Process costing, joint products and byproducts, will go through this later. Standard costing, service costing, done. Okay, budgetary control question is not there in your RTP. Come to your problems. Page 595. Yes. Budgetary control. A factory is currently working at 60% capacity and produces 1,200 units of a product. Management is thinking to increase the working capacity either to 60% or 90%. Therefore, this will be a flexible budget of 60%, 70%, and 90%. To increase the working capital either to 70 or 90%, it is estimated that at both the levels, it will be able to sell all the produced units. The other details are as under. At 70% capacity, the cost of raw material increases by 4%. Raw material increases by 4% and the selling price falls by 3%. At 90% capacity, the cost of raw materials increases by 5% and selling price falls by 4%. At 60% capacity, the production cost is rupees 360 per unit and it is sold at rupees 400 per unit. The unit cost of 360 units consists of the following: material, labor, factory overheads, administration, and selling overheads. Additional advertising cost of rupees 20,000 to be incurred for the selling of the product above 80%. Therefore, this will apply to which capacity? 90% capacity. Calculate the profits of the company when the factory works at 60, 70, and 90% capacity level. Offer your comments regarding increase in the capacity based on profit calculated. So very, very easy question. Right? Nothing is here. Only thing, you need to apply the increase in the raw material cost by 4%. Currently, it is 200. Currently, the raw material cost is 200. Therefore, when it increases by 4%, 208 by 5%, 210. Artha aita? Then everything else is same if you observe. All the other costs are same. Total variable cost is found out here. Right? Then fixed factory overheads is 50% fixed. Administration and selling overhead 60% fixed. That's what is taken here. Then found out what the profit is. Right? Now look at this, all of you. What is the profit? 4,80,000. At what capacity level this is? 60% capacity level. Am I right? Then at 70%, it is actually declining. Therefore, no, do not operate at 70. We should operate at 90% capacity level. That's what they were given here. Increase the production capacity to 90% is likely to increase the profit to maximum of 5,56,000 due to increase in contribution, while fixed cost is slightly increased due to advertising cost. At 70%, it is only 3,80,000, 88,000. There is a decrease, right? Therefore, it is recommended the factory should operate at 90% capacity. Is this clear, all of you? Easy question. One more thing I want you to write down. Write down the order of preparation of functional budgets. Order of preparation of functional budgets. In your notebook, write down order of preparation of functional budgets. Order of preparation of functional budgets. Keep your book open always. Order of preparation of functional budgets. So, first budget will be what? What is the
Sales.
starting budget? Very good. Sales. Sales budget you will prepare first. Then, based on the sales, you will produce what? Next one. You will prepare what? Next one.
Production.
Next one. Based on sales, what will we prepare?
Production.
Production budget. Production budget. Next, based on production budget, next one. Next one is what? Raw material consumption budget. No, first raw material consumption budget. After that, finally, raw material purchase budget. Raw material purchase budget. Write down below that. Sales equals to production. Sales equal to production if opening stock equals to closing stock. If opening stock equals to closing stock. Then next point. Use input output ratio. Use input output ratio to determine raw material consumption. To determine raw material consumption. To determine raw material consumption based on the production units. Based on the production units. Based on the production units. Right? The answer of the previous budget. The answer of the previous budget will be starting point of the next budget. The answer of the previous budget will be starting point of the next budget. Understood? Again, write down. When 3-period data is given, when 3-period data is given, when 3-period data is given, choose the periods. Choose the periods where fixed cost is same, fixed cost is same, and fixed cost is same in total. The same in total, and variable cost is fixed per unit. And variable cost is fixed per unit. Clear? Yes. This question you can go through. Okay, easy question, but lengthy ಇದೆ ಅಷ್ಟು. No special adjustments there. Next one is this. Again, all these are simple questions. This one. Prepare a priced stores ledger for each month using FIFO method. This is similar to your stores ledger, but in a budgetary format, a step. This one, please go through all of you. Price ledger, store price ledger, easy, right? You have the same thing, purchase, consumption. Again, what is the purchase, right? Receipts, what is purchased. Then what is the closing stock? What is the issue? Finally, I've got consumption. So this is what is. Please go through this. Yes, this one also. All of you look at this problem. Standard working hours 9 hours per day or 5 days per week. Maximum capacity actual hours expected to be worked per 4 week. Standard hours expected to be earned per 4 week. Remember the study material problem. I think illustration 7 ಇರ್ಬೇಕಿದು. Same problem has come in the study material. Illustration 7. Yes, explain the suitability of flexible budget. Theory question. Seasonal fluctuations. This is what I told you. Yes. Make to order basis like shipbuilding. New products are introduced always. All right. I think the other ones, once you solve, you'll get to know. This is, I think, cash budget. Yes, cash budget problem. Go through this one also. Same FM and whatever I've done, no, the same thing. Yeah, I think everything else you can go through. Please read all the other questions. Okay. I have covered all the important points that's required for budgetary control. All right. The last one is joint products. Two or more products of equal importance produced simultaneously from the same process are nothing but joint products. I repeat, two or more products of equal importance produced simultaneously from the same process is called joint products. Understood? Right? Whereas what are co-products? They are produced simultaneously but need not be from the same process. Right? They are co-products. Byproducts, which emerges incidentally. They're not of equal importance, economic importance. And it emerges incidentally. Your main objective is not to produce the byproduct, right? They are the byproducts. Example, bagasse molasses. Your joint products example, say crude oil. From that you get crude petroleum, diesel, kerosene, etc. There's nothing but joint products. In joint products, first there is an input, a common input, a raw material. Understood? It undergoes a common process, and during the process, joint cost is incurred. At the point of separation, you get joint products. Joint product A, B, and C. Right? The best example, like I told, is crude oil, from which you get crude petroleum, diesel, kerosene. Now, there may be a ready market. There may be a ready market at the point of separation. Understood? Then these products, either all or some of them, may be further processed to get a refined version, that is refined petroleum, diesel, kerosene, etc. It may or may not be refined further. Again, it's all me and understood. So either they will have a ready market at the point of separation only and no ready market later on, or it could be such that there is no ready market at the point of separation. There you have a market only after further processing cost, right? Or at both stages you may have a market depending on how the problem is structured. Is this clear, all of you? Right now, like I said, joint cost is incurred and then further processing cost is also incurred. Understood? Right? Depending on the further processing cost and the nature of the further processing cost, are you may that may further determine what should be the method of apportionment of the joint cost. Clear? So further processing cost is important. It will determine how the joint cost should be apportioned. How is that? First, let us understand what are the different methods for apportioning the joint cost. First one, physical units method based on the number of units, Bhavani. If it is, concentrate all of you, if it is all of them, if all of them are measured using the same unit of measurement, then you can use physical unit method. For example, if everything is measured in terms of liters, yes, possible. Everything measured in terms of kg, yes, possible. Understood? Otherwise, not. Otherwise, not. Then comes average unit cost method. Under physical unit method, what do we do? Yes, under physical unit method, we do not find out the average cost. Total joint cost is there, clear all of you? Multiplied into physical units of product A, if there are three products A, B and C. If there are three products A, B and C, Nikhil, you take the total joint cost, multiply into the number of physical units of product A, everybody clear? Divided by total units. That way you do for each. In average unit cost method, find out the total joint cost divided by the total units, find out the average cost, multiply into the respective units. That is average unit cost. Both are almost same. Both are almost same. Physical unit method and average unit cost method. Then comes survey method. In survey method, in Chara, certain point values are arrived at based on R&D. That is why it is also called point value method. Clear, all of you? So these points have to be multiplied into the joint cost to arrive at what is the share of joint cost for each of the joint products. Is this clear? Then comes your market value based on sales or market value. Under that, you have different methods. First one is NRV, net realizable value method. Under NRV, you follow working back method. Sales minus profit percentage minus sales commission, arthak idea, minus further processing cost. Then you get the share of joint cost. Is it clear? That is NRV method. Then market value at the point of split off. You can use that ratio for apportionment of joint cost. When I say market value, it is always total value. It is always total value, total market value, not the selling price per unit. Am I clear? And then lastly, you have market value after further processing. Again, you have to consider the total market value. Again, you have to consider the total market value and not the per unit selling price. Right? Next, another important theory question is treatment of byproducts. Right? Treatment of the byproduct cost. Sit straight, all of you. Now, how do you treat this byproduct? Depends on whether it is of substantial value or negligible value. What did I say? It depends on whether it is of substantial value or negligible value. Say it is of substantial value. Then you may treat it on par with your joint products. Is it clear? If it is of substantial total value, it may be treated on par with the joint products. If it is of small total value, right, then you may do either of the following. Either create out from the process account or from the joint products, remove it off, take it to costing P&L account. That can be done. Understood? So here you reduce the cost here itself. Whatever the sale values, illay madu. Artha aita. So you remember we had done one problem, joint products I had given as homework problem. I had explained it. In that we had reduced it from the joint in the process account itself. Clear, all of you? That is the treatment of, again, very frequently asked examination questions. All right. So open the caps material, page number 70. Yes, read.
Joint products and byproducts. Joint products. Two or more products of equal importance produced simultaneously from the same process are known as joint products. Example, crude petroleum, crude diesel, crude kerosene, etc. Co-products. Manufacture of different products simultaneously leads to co-products. Example, Jeep and car manufactured simultaneously separate. Byproducts. The product intended to manufactured is called main product and product incidentally arising is called byproduct. Example, molasses and bagasse in sugar manufacture. Methods of apportionment of joint cost. First one, physical unit method. Average unit cost, survey method, contribution margin method, market value method. Under that, market
For
value
contribution margin, please write here. That is two arrow marks. Fixed, variable. Under fixed, contribution ratio. Under variable, either physical units or average unit cost method. Yes, ma, continue.
under market value method, market value at split off, market value after further processing, and NRV. Physical unit method. The basis for apportioning joint cost over the joint products is the physical volume of material present in the joint products. Average unit cost method. Under this method, total process cost up to the point of separation is divided by total units. Survey method. Under this method, joint costs are apportioned over the joint products on the basis of percentage values assigned to the products. Contribution margin. Margin method. In this method, joint costs are segregated into two parts. Variable cost, apportioned on basis of units. Fixed cost, apportioned on basis of contribution earned. Market value method. Market value equals units produced into price of a unit of joint product. Normally, joint cost is apportioned based on market value at split off value. Treatment of byproducts. Byproducts of substantial value, same as treatment of joint products. Require further processing NRV of byproducts at split off equals realizable value of byproduct minus further processing cost. Byproduct not of substantial value may be dealt in any of the following two ways. Sale value credited to costing profit and loss account and no credit to be given in cost accounts. Sale proceeds of the byproducts to be deducted from the total costs. Summary of different types of method of apportioning joint costs that can be used under certain circumstances. Physical unit method. When sale price of all the products is uniform. Net realizable value at split off point method. When the realizable value of joint products at the split off is not known. Technical estimates. When the result obtained by net realizable value at the split off point method does not match with the resources consumed by joint products. Market value at point of separation, where further processing costs are incurred disproportionately. Market value after further processing, where further processing costs after the point of separation are proportionate and all the joint products are subject to further processing. Average unit cost method, when units produced have same unit.
Yes, so this is one of the formats for preparing the share of joint cost. An increment approach has to be followed for determining whether it should be sold at split off point or after further processing. Clear? Incremental format has to be followed. Okay, come to your RTP. Yes. Read this problem.
ABC Limited operates a simple chemical process to convert a single material into three separate items, referred to here as X, Y, and Z. All three end products are separated simultaneously at a single split off point. Product X and Y are ready for sale immediately upon split off without further processing or any other additional cost. Product Z, however, is processed further before being sold. There is no available market price for Z at the split off point. The selling prices quoted here are expected to remain the same in the coming year. During 2024-25, the selling prices of the items and the total amount sold were X 186 tons sold for 3000 per ton, Y 527 tons sold for 2250 per ton, Z 736 tons sold for 1500 per ton. The total joint manufacturing costs for the year were 12,50,000. An additional 6,20,000 was spent to finish product Z. There were no opening inventories of X, Y, and Z at end of the year. The following inventories of complete units were on hand: X 180 tons, Y 60 tons, Z 25 tons. There was no opening or closing work in progress required. Compute the cost of inventories of X, Y, and Z and cost of goods sold for the year ended March 31st, 2025 using net realizable value method of joint cost allocation.
So for NRV method, what are the things we need? We need the selling price, the profit percentage, sales commission, and share, right? And then further processing cost. When you minus it, you'll get the share of joint cost. Clear? Right? Now, from this, product X and Y are already for sale, are ready for sale immediately upon split off point without further processing or any other further additional cost. Product Z is, however, has to be processed further. Okay. Next, during 24-25, the selling prices of the items and the total amount sold were, right? So this is the selling price and the amount quantity sold. There was no opening inventories. However, closing inventories is given here. Yes. So selling price is given all of you 3,000, 2,250, 1,500. Is it clear, everybody? Yes. Next, the total manufacturing cost for the year was 12,50,000 and additional 6,20,000 was spent to finish product Z. That means this is further processing cost. ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಾ? Okay. Product X and Y, they have not told anything about further processing. Have they given anything about product X and Y being further processed? Have they given any data with respect to X and Y as being further processed? Tell me yes or no. No, nothing is given. However, ZDK they've given selling price. So 1,500 into 736, do it. 1,500 into 736, how much? 1,500 minus 736 is how much?
11,04,000.
11 lakh 2,000. So use that ratio. 11 lakh.
4,000.
11 lakh 4,000. Okay. Then this will give some answer. This will give some answer. Write this down. Right. And this becomes a ratio. Let us see how they have done it. Question number 14. Yes, look at this now. Statement of joint cost allocation of inventories of X, Y, and Z by using net realizable value method. Final sales value of total production, working note number 1. Look at this. Right? Total production of 3 products for the year 24-25. Quantity sold in tons of X, Y, and Z is given here. Look at this. So X, Y, and Z total sales. This is the right quantity sold in tons, quantity of ending inventory, total production, ending inventory as a percentage. Right? Here it is given, all of you look at this. Opening stock is how much? There were no opening stock of X, Y, and Z. However, closing stock is 180, 60, and 25. Come here, all of you. So closing stock, quantity of ending inventory, 180, 60, 25. Sold data is given 186, 527, 736. Therefore, if you add it up, right? So you are supposed to add this and then you will get the total production. Artha ಆಗ್ತಾ ಇದೆಯಾ? Right? And then here we have found out 3 divided by 4. Ending inventory as a percentage of the total sales is found out. Total units produced. Okay? Now, here, look at this, all of you. Final sales value multiply final total sales. Further processing cost only for Z. Yes. From sale minus that, you get this has to be used as a ratio. Right? That is what I told here also. The same thing I told here. Here, minus further processing cost, 11,04,000 minus further processing cost, and then take these two. That ratio has to be used. Artha aita? Yes. So joint cost allocated, working out number 2, 12,50,000 has to be allocated in this ratio. Okay? Clear, all of you? Yes. So NRVLE, if incomplete information is given, based on whatever information is there, on that you find out a ratio and then do it. Write a note. For NRV method within bracket working back, joint cost heading, NRV method within bracket working back, write down sales less profit percent less sales commission less further processing cost. The final answer will be what? Share of joint cost. Below that, however, even if one of the above items is missing or amounts is missing, even if one of the items above is missing, right? Even if one of the items is missing, then find out ratio of NRV, and apply that to the joint cost. Enadu artha aita? Yes. How do you find out the ratio of NRV? Obviously, it will not be share of joint cost. Whatever the balancing figure is, that is the ratio of NRV. Is this clear? Yes. All right. Come to revision material. Is joint products and byproducts. Look at this. 3 products X, Y, and Z along with a byproduct B are obtained, right? Again in crude state, which require further processing cost of rupees 5 for X, rupees 4 for Y, and rupees 2.5 for Z. The byproduct is, however, sellable as such to a nearby factory. The selling price of the 3 main products and byproduct, assuming they should yield a net margin of 25% of cost, are fixed at 13.75, 8.75, 7.5, and 1. During a period, the joint input cost, including the material cost, was 90,800, and respective outputs were as follows. Byproducts should be credited to the joint cost, and only the net joint costs are to be allocated to the main products. Calculate the joint cost per unit of each product and the margin available as a percentage on cost. Margin as a percentage on cost. Right? So now selling price is given. From that, minus the anticipated margin at 25% on cost, that is 20% on sales. Right? They've given here, calculate the joint cost per unit of each product and the margin available as a percentage on cost. They've given here, it should yield a net margin of 25% on cost. Can you see this? Net margin of 25% on cost. Therefore, that same thing is applied here. So 25% on cost is 20% on sales. So sales to 1/5 is taken here. Minus it, you get cost of sales less profit split of cost. Joint cost per unit. Output units, total output cost. And this is the allocation ratio for joint costs. Yes. Clear? Now, this is important. Treatment of byproducts. It is reduced. Sale value is reduced from this. Sale value of the byproduct is reduced from that. And this 90,000 is apportioned. Right? This one again, solve this problem. I've done this in the course. Physical unit and contribution margin method. Contribution margin only, I'm not sure. Let me check this question. Fixed cost, is it 0 or negative? Yeah, this is fine. This problem is fine. Class problem only, remember, fixed cost was negative. Therefore, we did not charge to the other one. Fixed cost was entirely charged to the product which has positive. Same type of questions again and again asked. Similar kind of questions. This is important, extremely important. Okay, here, but he has asked only small total value. When there is small total value, the sales value can be taken to costing P&L account or the sale proceeds, right, can be deducted from the total costs. Two methods. Yes, this one also A, B, C problem. This one, go through this. Mark this problem, go through it. All are similar type of problems. You can go through all of them. Clear? So with that, I've covered all the practical concepts. We'll take a small break. Okay. We'll take a break. We'll come back. After that, we'll go through some theory part and then we'll go to the suggested answers. Okay. September 25 to each chapter, at least my chapters, I'll just go through it and probably will try to solve them as quickly as possible. Okay. So we'll take 15 minutes break. It is 1:25 now. All of you come back by 1:40.
Yes, sir.
Yes, sir.
Yes, come back. Kirtana, Jani, everybody, Insara, Priya, Ramya, all of you come back quickly. Bharat, is quick. Yes. Quickly, let's go through the theory. Yes, sir, anyway, would have covered the basics. Cost means the resources utilized or spent or potentially to be incurred on the manufacture of a product or ending of a service. Two important objectives: cost control, cost reduction. 100% ಸರಿ ಮಾಡೇ ಇರ್ತಾರೆ. Avoiding wasteful expenditure and reducing the cost per unit along with the definition. Now, come to the theoretical aspects. Other objectives. What are the other objectives? Ascertainment of cost, determination of selling price, ascertaining profit of each activity, assigning management in decision making. Objectives of cost control: determination of predetermined standard, measurement of actual performance, comparison, analysis of variance and action. Now, I told you for theory, your CAPS material is important. The main CAPS material I'm talking about. Yes, the study material. This is the revision material. Study material also you need to go through. Here only the brief points are mentioned. Okay. Fixed cost remains fixed in total but varies per unit. Variable cost varies in total but remains fixed per unit. Stair step fixed cost, it's not same as your variable cost. Stair step andre, it will be constant up to a certain level. Beyond when the level increases, again it will go to the next slab, then again it will be constant for certain level, and then again it will increase. Right? Increase in variable cost means increase per unit. This is important. Right? If a question says the variable cost is increased, that means the per unit cost is increased. Fixed cost means if it is increased, it is in total. Likewise, you can also say another point. If they say sales is increased, it is not Albarcodi. If sales is increased, is normally units. If sales is increased, is normally units. Unless specifically given, then it is selling price. Then it is selling price. Another point is if sales has increased, it's normally due to units. Unless specifically given, then it is selling price. Yes, Nikhil, Priya, Tanya, all of you come back quickly. Bharat. Yes. Cost center, right? It is a person, a department, equipment, could be anything, machine, location, group for which cost is accumulated. Anything for which you accumulate a cost, that is called a cost center. Cost unit, method of expressing the cost of a product or service. It is a single cost unit. Composite unit we learned in service costing. Right? Any abnormal loss always taken to costing P&L account. Research and development cost. The research expenses, the expense of searching for new or improved products, new application of materials or new or improved methods. Development expenses, these expenses of the, what is development expense? Expenses of the process which begins with the implementation of the decision to produce a new or improved product. Classification of cost, element wise classification, function wise classification, nature wise classification, which we have already discussed. Right? Based on normality, that is normal abnormal cost, then controllability, which is controllable, not controllable, and then managerial decision making cost. Opportunity cost, the cost of benefit foregone by not selecting the next best alternative is opportunity cost. It's always relevant. It is always relevant cost. Standard cost, this is on per unit basis. Predetermined cost is my standard cost, predetermined per unit. Keywords. Budgeted cost, normally it will be total basis, right? Relevant cost, which is relevant, not relevant, we discussed. Differential cost, that changes with the decision. Any decision that it changes, that is the differential cost. Out of pocket cost, right? And imputed cost. Anyway, below we have all of this in detail. All direct, all this sir would have anyway discussed. I don't want to again repeat all of this. Notional cost is relevant only if it would have been actually incurred, right? If not for the particular product or building, etc. For example, cost which does not involve cash outflow but provided on notional basis. Example, rent of proprietor's building. Now, if the business had not occupied this building, then he would actually get the rent. Did you understand? In that case, only in such cases, notional cost is relevant. Allocation, charging directly, this we discussed in overheads already. What is allocation? What is apportionment? When it is directly attributable, allocation. Otherwise, on a reasonable basis, apportionment. Absorption is allocated cost plus apportioned cost. Conversion cost. Cost incurred to convert raw materials to finished goods. That is called conversion cost. Standard cost, I told you, predetermined cost. Budgeted, normally on total basis. All this already discussed. Right? Two alternatives. When there are two alternatives, that is differential cost, out of pocket cost, which involves cash outflow. Imputed cost, it is the cost which does not involve any cash outflow, rather is provided on notional basis. Right? Factors to be considered for installing a system of cost accounting. This is important. Right? Always go through all of these points. You should know all of these points. Okay? Technical aspects, organization structure, then objective. What is the objective has to be defined. All of this, please go through. Important. Methods of costing. Actually, there are only two: job costing and process costing. Right? Again, cost accounting with the use of information technology. What are the benefits? Reconciliation. Right? Next, a move towards paperless environment. Underline that. They'll be saving, right, in terms of money and time and efforts. So ERP, paperless environment, just in time, internet, all these are important things. Then management accounting, application of the principles of cost accounting, no? Right? And financial management to create, protect, preserve, and increase value for the stakeholders. That is nothing but management accounting. Right? Increase value for the stakeholders. Objective, similar to cost accounting, discuss Supra. It is a process of accounting for costs which begins with recording of income and expenditure and ends with preparation of periodical statements and reports for ascertaining and controlling costs. Responsibility centers. Now, this is again important from theory perspective. They can ask this, right? Profit center, revenue center, investment center, cost center. What are the cost centers? Your personal cost center, impersonal cost center, production cost center, and service cost center. This is my departments. Right? P&L based responsibility centers, cost centers, revenue centers, profit centers, balance sheet basis, investment centers. And this is extremely important. Very, very important topic. Because recently added and already asked a couple of times. Digital costing system. Digital costing system links different business functions such as production, procurement, inventory management with the digital costing system of its suppliers, customers, and market through data sharing and network interaction. All of them are linked. Ascertainment of cost with certainty, right? With certainty on a cost object. Ascertainment of cost. Analysis of data on time spent on each activity to study and formulate incentive plans, right? helps in material requirement planning and scheduling, that is just in time, helps to identify and eliminate non-value added activities. Can you see this from each chapter? One point. Either labor, material. I'm just giving you points to remember. Material chapter, right? Idu activity ABC. Data on resource consumption is helpful in setting standards and measurement of variances on real-time basis. Standards and measurement of variances. This is your standard costing, budgetary control, variance analysis. Alle barutte. Data on current market prices of material and consumable helps to estimate cost and setting standards on mark-to-market basis. Mark-to-market basis. Extrapolation of data on customer behavior towards the products to predict the market demand. It is helpful in preparation of budgets, planning of production. Again, budgetary control. Market demand. A better analysis of cost behavior improves the cost benefit analysis and equipping the management in informed decision making. So, cost behavior, customer behavior. Okay. Then all of this anyway, we have discussed material. I've gone through the entire theory. Employee cost. Yes. Idle time analysis, very important. What is idle time? What is timekeeping? What is time booking? Discuss in the class. Double shift. Yes. Time and motion study. Time study. Motion study of equipments, of people. Job analysis. Underline this. Job analysis is based on qualifications. Job evaluation. Right? Worth of the job. Merit rating for evaluating performance. Right? Everything else anyway. We have discussed this in the last class. Right? Cost of employees turnover. Again, theoretical question can come, practical question normally has come many times. Preventive costs and replacement costs. Yes. Go through the chart. Next. Yes, overheads discussed already. Sir would have anyway done all this cost sheet. Okay. These examples you go through. Okay. Go through these examples. Yes, batch costing and unit costing. Batch costing we discussed last class. Use our formula 2AS by C. Instead of D, you'll use A. Annual demand, setup cost, and carrying cost. Right? Operation costing, I told you, will come here. Many operations make one process. Multiple processes, then finally you get a product. Yes, look at these questions now. Examination questions. So again, important question. Difference between cost accounting and management accounting. Repeatedly asked. Okay. This one. Next. Waste and scrap. What is the treatment? Right? Waste and scrap the treatment. Objectives of cost accounting. Right? What is idle capacity? Over absorption, under absorption. What is the treatment? And then cost allocation and cost absorption. Look at this. Mention the cost units for these particular industries. Right? Automobile, number, gas, cubic feet, all of this, bricks and brick work. So go through this. Discuss the impact of information technology. I told you, important question, asked multiple times. Paperless environment, right? Induction of ERPs, functional activities, all of the same thing. Help of internet, just-in-time system, ascertainment of cost is easier, uniformity is there. Differentiate between cost control and cost reduction, extremely important, asked many times. Cost control and cost reduction. Method of costing to be used in the following industries. Again, a repeatedly asked question. They'll give you the industry, they'll tell you what are the method of costing to be applied. So identify the responsibility center. I told you only what are the responsibility centers, right? Discretionary cost, revenue center, investment center, standard cost center, all of this. The assembly department works with the fixed input output norms, standard labor hours, and material quantities are established for each unit, and any deviation is analyzed as variance. That is why standard cost center. The corporate R&D lab focuses on product innovation. Its output cannot be measured financially, and its performance is evaluated based only on annual annual budget allocated. Adike, they have told it is discretionary cost center. Why? Look at this. The R&D lab focuses on product innovation, and its output cannot be measured in financial terms. Can you all see this? Yes, Ramya, are you there? Bharat. The performance of this department is evaluated only against budget allocated, because input output ratio cannot be defined and cost cannot be directly linked to output. It is classified as a discretionary cost center. Right? West Zone Sales Department. It is sales department, so obviously it is revenue. Sales department, revenue center. The global operations division has authority over revenue, cost, and investment decisions, and its performance is evaluated based on ROI. ROI and the return on investment. Investment center. Did you understand? So this is investment center, revenue center. This is my standard cost center. This is discretionary cost center. ABC related again. ಇದನ್ನ go through ಮಾಡಿ. All the different types of cost, the explanation is given here. That's all. Cost pool, cost drivers, right? Limitations of budgetary control system. Explain research and development expenses and its treatment in cost accounting. Again, simple. Sir, should I write such big paragraphs? No. Points. Okay? In point wise, you have to write. Again, this is important. Explain defective units and its treatment. Defective units and its treatments. Again, same thing. Costs, ella cost they've asked. Yeah, cost pool and what are the cost drivers? Just go through all of these theory questions. Do not miss a single question. ಎಲ್ಲ ನೋಡಿ. ಅದರಲ್ಲಿ what are repeatedly asked is important. Very, very important. Okay? Yes. So now come to suggested answers. Suggested answer September 25. Page 649. Okay, come here. Again, this is cost sheet related. Yes. Prime cost, factory cost ಎಲ್ಲ ಕೇಳಿದ್ದಾರೆ. Cost of goods sold and amount of profit. Next one. As for absorption costing, we'll read the question, all of you. So, JMS Limited, a soft drink company, is intending to introduce a new product, namely herbs infused mineral water, to the market. Annual sales of this new product is estimated at 36,000 units. So the annual sales is 36,000 units with a selling price of 75 per unit. The cost estimates of this new product are as follows. So there is only one product. So annual sales of this new product. What is the new product? Herbs infused mineral water. Okay, they want to introduce a new product called herbs infused mineral water. Annual sales is estimated to be 36,000 units with a selling price of 75 per unit. Cost estimates they've given below. Direct material, direct labor cost, manufacturing overheads variable, then fixed, then variable, fixed, variable, and fixed. There will be no closing stock, easy for you. No closing stock of herbs infused mineral water. New product and the opening stock illa. Artha aita? So new products opening stock is also not there. On the basis of the above case scenario, we are required to answer the following MCQs. What is the cost of production and total cost as per absorption costing? Cost of production, and then what all things will come in cost of production, you know, direct material, direct labor, right? Manufacturing overheads. Now, whether it is variable or fixed doesn't matter for absorption costing. NPDA, fixed
Yes.
cost also you will have. Is it clear, all of you? Right? Then general admin and overheads. If it is related to production, we add. Otherwise, we do not add. Correct? And then S&D is not included. Clear, all of you? So based on that, cost of production and then total cost is calculated. Now all of you do it. Calculate. Calculate, all of you. ಎಲ್ಲ add ಮಾಡಿ.
Twenty lakh 18,750.
Until here, is it? And until
No,
here,
sir. No, sir. Only starting 4 items is 20 lakh 18,750.
20 lakh.
18,750.
Okay. So then obviously this has to be the answer. Remaining, if you add these two, if you add everything, then
23 lakh 75,000.
if you add all, then if you add all, add all, 25 lakh 20 ಬರ್ತಾ ಇದೆಯಾ?
Yes, sir.
Yes. So see, there was little bit confusion. You know, administration costs related to production, not related to production, is a confusion. ನೆನಪಿದೆಯಲ್ಲ ನಿಮ್ಗೆ? You have that confusion. But in this there is no confusion because the MCQ is designed in such a way that it is very easy for you to choose. Did you understand, all of you?
Yes, sir.
Yes. Correct. Cost of production and total cost as per absorption costing. Next. And it is so easy, this one. Look at this one, 2 marks. ನಿಮ್ಗೆ ಇದ್ರಲ್ಲಿ ಕನ್ಫ್ಯೂಷನ್ ಇದ್ರು ಟೋಟಲ್ ಕಾಸ್ಟ್ ಅಲ್ಲಿ ಗೊತ್ತಾಗ್ಬಿಡುತ್ತೆ. ಟೋಟಲ್ ಕಾಸ್ಟ್ ಎಲ್ಲ ಆಡ್ ಮಾಡಿದ್ರೆ ಇಟ್ ಈಸ್ 25 lakh 20, ರೈಟ್? ವೆನ್ ಯು ಆಡ್ ಎವ್ರಿಥಿಂಗ್,
Yes, sir.
ರೈಟ್? ವಾಟ್ ಇಸ್ ದ ಅಮೌಂಟ್ ಆಫ್ ಟೋಟಲ್ ವೇರಿಯಬಲ್ ಕಾಸ್ಟ್? ವೆರಿ ಸಿಂಪಲ್. ಯರ್ ವಾಟ್ ಇಸ್ ದೇರ್ ಇನ್ ದಿಸ್? ಈ ತರ ಕ್ವಶನ್ಸ್ ಬರುತ್ತೆ. ಅಂಡ್ ದೆನ್ ಯು ಸೇ ದಟ್ Examination question. Look at this, so easy. Variable cost, variable cost, variable cost, variable cost, variable cost. Add it up. Do it quickly. Add up all the variable costs. Material, labor, variable, variable, variable. Just add this. ಏನು ಕನ್ಫ್ಯೂಷನ್ ಇಲ್ಲ. ಯೂನಿಟ್ಸ್ ಓಪನಿಂಗ್ ಸ್ಟಾಕ್ ಇಸ್ ನಾಟ್ ದೇರ್, ಕ್ಲೋಸಿಂಗ್ ಸ್ಟಾಕ್ ಇಸ್ ನಾಟ್ ದೇರ್. ನೋ ಕನ್ಫ್ಯೂಷನ್ ಆಫ್ whatsoever nature.
20 lakh
Yes.
52,000.
Yes. 20 lakh.
52,000. Option
20 lakh 52,000. What is the amount of contribution per unit earned at the estimated level of sales? So, what is the amount of contribution per unit earned? Now, very simple. 20 lakh 52,000 variable cost divided by the number of units. What is the number of units? 36,000, alva? Yes.
Yes, sir.
36,000 divided how much?
57.
57.
57. Selling price is how much? 75. 75 minus 57. Yes. What is the answer?
18. B.
18.
That's the answer. What is the break-even sales in rupees? Huh? What's the break-even sales in rupees? So for that, contribution per unit you found out, right? Find out what is the total fixed cost. Almadi, what's the total fixed cost? Total fixed cost. You have to add. Okay, I'll do it. Illy. Very simple. Fixed cost, fixed cost, fixed cost. Add this up. Add this up.
4 lakhs
4,68,000.
4 lakh 68. You can do divided by 18 into 75. Divided by 18 into 75. Either that way, or you can find out PVR and then do it anyway. Yes, tell me. What is the break-even sales?
19 lakh 50.
90 lakh 50,000.
Option D.
90 lakh 15,000. 19 lakh 50,000. Next, what will be the profit if the actual sales are 10% less than the estimated sales? Right? That means I told you, if nothing is mentioned, this 10% is units or selling price. What are they saying?
Units.
Units, right? So sales would have reduced. So instead of 36,000, do 36,000 into 90%. How much is that?
32,400.
36. Yes.
32,400.
32,400 into contribution. What is the contribution per unit?
18.
18.
18 minus fixed cost. What's the fixed cost? You had written no, the fixed cost. Do that and then you will
2
get
lakh
the.
86.
Yes. What's the profit?
97,200.
1 lakh 15,200.
1 lakh 51, is it? 1 lakh
1
15
lakh
200.
15,200.
Yes, that's the answer. Simple. 10 marks in your pocket. Yes, I'm not saying that every time, every question will be like this, but one such question will be there. Where it is easy. It could be anywhere. ಅರ್ಥ ಆಗ್ತಿದೆ ನಿಮ್ಗೆ? Examination question September 20 cannot get easier than this, right? This is anyway standard costing.
Sir, was it 151 or 115? Sir?
I don't know. She told me 115. I didn't calculate.
115. Yes.
115. Okay. Yes.
Yes.
This is standard costing. Next, look at this. A company produces two joint products X and Y using the same type of material. The cost data to produce 200 units of product X, 400 units of product Y are as under material, labor, fixed overheads. By looking at this, I know they're going towards contribution. Why? Because fixed is given. Sales of product X was 200 units at rupees 350 per unit and product Y was 500 units in 250 per unit. Use contribution margin method, and in what ratio fixed overheads will be apportioned between product X and product Y. So in the ratio of the contribution, find out what the contribution is. Yes. So just tell me. Total variable cost is so much. Total fixed cost is 20,000. Contribution, how will you find out? The selling price of X of Y. Of X is how much? 350.
350.
Of Y it is
250.
250. Right? 350 and 250. This is the selling price. Next, they've given the cost data to produce 200 units of product X and 400 units of product Y are as under they've given. Yes. What is the total variable cost here? Any?
1,20,000.
20.
1 point?
2.
1.2 lakh, correct? 1 lakh 20,000. This based on number of units now you do. Divided by total units is 600. How much is this?
200.
Divided by 600 is how much?
200.
200.
200. This will be my variable cost. This is my selling price. Therefore, you will get the ratio. ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಾ? Yes. Next, the management of Y Limited has provided the following information. Opening stock inventory turnover ratio. Yeah, look at this. Simple average inventory of raw material is to be held by Y Limited? Question mark. Right? Assume 360 days in a year. Opening stock, closing stock, raw material consumed during the year is given. Right? What will be the number of days for which the average inventory of raw material will be held? Right? Raw material, you know what is the formula? Yes or no? Raw material consumed divided by average inventory will give you the number of days. So opening stock of raw material is for 25,000. Closing stock of raw material is 75,000. Raw material consumed during the year is 7,50,000. What will be the number of days for which average inventory of raw material is to be held by Y Limited? Assume 360 days in a year. Yes. What is the formula we normally follow for your inventory holding period? Inventory holding period formula. Ready? What is the formula for inventory holding period? You have learnt in FM also, in costing also. ಹೇಳ್ಬೇಕು ನೀವೇ ಹೇಳ್ಬೇಕು. Tell me. Yes. Inventory holding period formula. What do you think? How many days an inventory is held? So average inventory, how will you find? Opening plus closing by 2. ನೆನಪಿದ್ಯಾ ನಿಮಗೆ? Opening
Yes.
plus closing by 2. Yes. Here opening is 25,000. Closing is 75,000. What is average inventory?
50,000.
Yes, 50,000 is the average inventory. Next, raw material consumed is 7,50,000. 7,50,000 divided by 50,000 ಮಾಡಿ.
15.
Yes. So, but there is 360 days in a year. That we have to be careful. Right? So, ಹಂಗಂದ್ರೆ ನಾನು ಹೇಳ್ತೀನಿ 25,000 plus 75,000 divided by 2 is 50,000. Average inventory held is 50,000. Clear all of you? Average inventory held is 50,000. Raw material consumed during the year is 7,50,000. 7,50,000 divided by 360 is how much? 7,50,000 divided by 360 is how much?
2,083.33.
Point ಬರ್ತಾ ಇದೆಯಾ? Then 50,000 divided by that ಮಾಡಿ ಎಷ್ಟು ಬರುತ್ತೆ?
138.88.
138.88.
No, we didn't do it properly. Raw material consumed during the year.
4.0000.
Because they have given assume 360 days in a year, 7,50,000 is the raw material consumed for in 360 days. Am I right? Therefore, 7,50,000 divided by 360 andre per day barutte. Clear all of you? That per day you have to use to find out what is my average inventory held for number of days. Simple. Right? That way you can do. Or the other way around, 7.5 lakh divided by average inventory. Raw material consumed, that will give you turnover ratio. Do that 7.5 lakh divided by 50K. How much is this?
15.
15 times. Am I right? 15
Yes.
times the average inventory is turned around. 360 divided by 15.
24.
24 days. That is the answer. Clear all of you? Either that way or this way, you will get the same answer. Come here now. A product passes, but you have forgotten all the ratios. I repeat the ratios. If you want, write it down if you have forgotten. Raw material consumed divided by average inventory will give you inventory turnover ratio. Inventory turnover ratio, that will be in times. Then number of days divided by average inventory, number of days divided by inventory turnover ratio gives you inventory holding period. Inventory holding period, Bhavani. Yes, write down. First one is what? Raw material consumed by average inventory gives you inventory turnover ratio. Then inventory holding period is equals to number of days divided by inventory turnover ratio. Is it clear? Yes. Next, come down. Process costing, sir would have done that. Next. Look at this. PMP Limited manufactures a single product and absorbs the production overheads at a predetermined rate of 20 per machine hour. At the end of the financial year, it has been found that the actual production overheads incurred were 12 lakh. It included 80,000 on account of return of obsolete stores, right? And 30,000 being wages paid off for strike period. Both of them should not be included. The actual machine hours worked during the period were 50,000 hours. Therefore, absorbed overheads is how much? 50,000 into what's the predetermined rate? 20 per machine hour. Artha aita? Yes?
10 lakhs.
10 lakh. This is 10 lakh. Next. The production and sale was 20,000 units and 18,000 units. Therefore, 2,000 is what? Closing stock of finished goods. Closing stock of finished goods. What will be the amount of unabsorbed production overheads to be charged to cost of sales? That means 18,000 units. Artha ಆಗ್ತಿದೆ ನಿಮಗೆ? 18,000 units. Now, for that, first of all, 12 lakh is total. From this, you will subtract what?
80,000 and
80,000 and
30,000. 30,000.
yes, how much is this?
10 lakh 90,000.
10.90 lakh. Right? Therefore, what is under absorption? 0.90 is the under absorption. 0.90 divided by 20,000 into 18,000. Don't do 0.90, write down 90,000. 90,000 by 20,000 will give you supplementary overhead recovery rate into 18,000.
81,000.
How much is that?
81,000.
That's the answer. 2 marks. Simple. Did you all understand? Yes?
Yes, sir.
Next, descriptive questions. Right? Question number 1. RST Limited manufactures a standard line of office desks. The company operates with a monthly manufacturing capacity of 5,000 units. The following data relates to the output and cost of 2 consecutive months of production. Right? This is 2 consecutive months of production. April and May. Units manufactured, data, direct material, direct wages, factory overheads. In the month of June, the number of units manufactured will be 4,000 units. However, the prices of the direct material increases by 10%, direct wages increases by 15%, factory overheads will be reduced by 20%. The company decided to earn a profit of 11% on selling price, very important, right? Calculate the selling price per desk in the month of June when the monthly sale output is 4,000 units. Write down all of it. Let me open my notepad. And any problem sir has already done, nange ಹೇಳಿ ನಾನು ಅದನ್ನ ಮತ್ತೆ ಮಾಡಲ್ಲ. ಸರ್ ಮಾಡಿದ್ರೆ ನಂಗೆ ಹೇಳಿ, ಶೆಟ್ಟಿ ಸರ್.
Yes, sir.
Question, I hope you can refer. I hope you have the hard copies. I'll not keep going all tab. Okay? I'll not keep shifting. Can you all refer the question? Yes or no? Tell me.
Yes. Yes, sir.
Yes. So first of all, direct material, whatever they've given is for how many units? They have given the company operates with a monthly manufacturing capacity of 5,000, right? But units manufactured in April is how much? Please check.
3,000 units.
3,000 units, correct? They are telling in the month of June, the number of units manufactured will be 4,000 units, correct? So any one of the units months I have to take for calculating my direct material. Okay, write down. What is the direct material cost in April? 15 lakh, am I right?
Yes, sir.
Yes, yes.
Write down. So suggested answers September 25. Question. 1C, right? Or 1D, 1B.
1A.
1A.
1A na? Sorry, 1A. So you have to write, okay, statement of whatever dot 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 on the statement of, they have asked to find out what?
Selling price.
Selling price, but selling price direct barala. You need statement of computation of selling price, but it just. Okay, statement of computation of selling price. Only particulars and rupees. First one, direct material. 15 lakh, April for 3,000 units. We have how many units now? 4,000, am I right? 4,000,
Yes.
Sir.
right? So divided by 3,000 into 4,000. And after that, they have given, it will increase by what percentage?
10%.
10%. So 110%. Madi. Next, direct labor. 6 lakh is given. Divided by 3,000 into 4,000 into, this will increase by 15%, 115%. Calculate and tell me how much is this? Direct material, direct labor.
Direct material 22 lakh.
22 lakh. Then
9,20,000.
10 lakh 20, is it?
9 lakh 20.
9,20,000.
9.20 lakh. Okay. Next, what is given? Factory overheads ಕೊಟ್ಟಿದ್ದಾರೆ, correct?
Yes.
Factory overheads. Under that, variable within bracket. So factory overheads they have given is ಕೆಳಗಡೆ ಕೊಟ್ಟಿದ್ದಾರೆ. One second. Factory overheads will reduce by 20%, they have given. The fixed factory overheads will reduce by 20%. When they mean fixed factory overheads, what is the hint? When you saw fixed factory overheads, what is the hint? Semi variable, correct? So ಕೆಳಗಡೆ, right here, working note number 1. Leave some space, come down. Right? ಕೆಳಗಡೆ, working note number 1. Calculation of fixed and variable.
Sir Shetty sir has done this.
ಅಯ್ಯ ಅದೇ ನಾನು ಕೇಳಿದ್ ನಿಮ್ಗೆ. ಸರ್ ಮಾಡಿದಾರಂದ್ರೆ ನಾನು ಏನಕ್ಕೆ ಮತ್ತೆ ಮಾಡಬೇಕು? ಸರ್ ಇಸ್ ಡನ್ ದಿಸ್? ಎಸ್.
Yes.
Okay. All right. So very simple. ಅಲ್ಲಿ semi variable overhead ಇದೆ, ಅದನ್ನ change in cost by change in units you do and then you continue. Clear all of you? Please check ಮಾಡಿ, ಶೆಟ್ಟಿ ಸರ್ ಮಾಡಿ ನಾನು ಮತ್ತೆ ಮಾಡಲ್ಲ. ಯಾಕಂದ್ರೆ ಸಮ್ ಆಫ್ ದ ಪೋರ್ಷನ್ಸ್ ಓವರ್ಲ್ಯಾಪ್ ಆಗಿರುತ್ತೆ. ಇದನ್ನ ಐ ಕೆನಾಟ್ ಸೇ ದಿಸ್ ಇಸ್ ಕಾಸ್ಟ್ ಶೀಟ್, ರೈಟ್? ಇಲ್ಲಿ ಕಾಸ್ಟ್ ಶೀಟ್ ಅಂತ ಏನಿಲ್ಲ. ಅರ್ಥ ಆಯ್ತಾ ನಿಮ್ಗೆ? ಇಟ್ ಇಸ್ ಜಸ್ಟ್ ನಾರ್ಮಲ್ ಕಂಪ್ಯೂಟೇಷನ್, ಅದಕ್ಕೆ ನಾನು ಮಾಡ್ತಿದ್ದೆ. ಟೀಕೆ. ನೆಕ್ಸ್ಟ್, come to the second one. I hope sir has not done that. It is employee cost related.
No, sir has not.
Sir is not done. Come there. So the following information relates to two workers, right, who are engaged in producing the same product by using the same material. All right. Time allowed to make the product. This is my time allowed, TA. Then the actual time taken A, and then time taken B. Normal wastage is same for both. Bonus payment plan, I'll say 50% plan for Ajay and then Rowan plan for Vijay. Factory overhead recovered rupees 360 per hour for actual time taken by each worker. Right? So this is 360 into time taken. Factory cost. This is factory overhead. This is factory cost. For the product, for each worker, they've already given. So this you remember, this is your cost sheet approach. We write it in the cost sheet and then find out two equations simultaneously. You make two equations, simultaneous equation in the resolve. Are you able to recall this problem, all of you?
Yes.
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 Compute the normal hourly wage rate and compute the cost of material used. Shall we do it quickly? Yes. Write down.
Yes.
1B. Yes. Let X be cost of material. Let X be the cost of material and Y be wage rate. Wage rate. Because they have not given that, correct? So factory cost, right, of Ajoy and Bijoy. Particulars. Okay. Then on top you write amount in rupees. You have Ajoy, Bijoy. Two columns. Draw columns, huh? I'm not drawing columns. Yes. First one. Material cost. We have assumed this to be X. B. Wages. Right? So for Y it is wages would be time taken. So right here, only two components fixed based on time taken. Second, bonus. Bonus. Right? Yes. Tell me for X, for Ajay. What is the time taken? Big ID. Time
32
taken
hours.
32. Y. For Vijay, what is the time taken?
30 hours.
40 ones.
Sorry?
30.
30 hours. 30 Y. Next. Plus 50% off. Right? Time saved. Time saved is time allowed minus time taken. What is the time allowed for? I think time allowed is same, no, for both?
40 hours.
Yes. 40
40
hours.
minus 32 into time rate, that is Y. And here again, plus. Yes. For Rowan plan, what is it? Time taken
10.
by time allowed, right? Time taken by time allowed into, Eddie?
Time save.
Sorry, time now the formula prakara ಇಲ್ಲಿ ಮಾಡಿ. So this will be same thing, time taken to time rate, that is 30 into Y Time saved is how much?
10 hours.
10 months.
10 hours. So 10 divided by, yes, 40 divided by 40 into 30 into y. Yes, solve this. How much you get? This is equals to 300 by 40, 3 by 4. That is 7.5y. Is it right?
Yes.
7.5y. And on top it is 50% of 8. That is 4y. Correct? This is 4y. This is 7.5y. Aita.
Yes.
Next. C. Overheads. Overheads. Yes. What are they given for overheads? It is absorbed based on the number of hours. Therefore, 32 hours into something. And here it is 30 hours. Into how much is the rate per hour?
360.
360.
360. Multiply.
7,520 and 10,800.
Yes. 10,800 and
11,250.
11,520. This will be equals to factory cost. Right? You'll get my factory cost. Amount we know. What's the amount? 1,24,800. And from here it is very easy. The equation part you can do. Yes or no? All of you.
Yes.
The second one is how much?
Same.
First one, 1 lakh.
1,24,800.
For both it is same.
Same. Yes.
For both it is same. 1,24,800. Now shall we look at the suggested answer from here? Yes. Write down there. Okay. Let's look at the suggested answer from here. Because forming the equation is the most important thing. Solving it is not a difficult part. So this is the question. Come down. Yes, look at the answer. Compare our answers. X, 32x, 4y, all matching. 11,520, 1,24,800. Then X, 30y, 7.5y, 10,800 and 1,24,800. Simple. This is equation 1 and 2 and then solve for y. Is it clear all of you?
Yes.
Next question. C. This is standard costing. Correct? Beta. Then come to question 2. Toll plaza problem. Important. Okay, go through. Anyway, toll plaza, so that they have asked last time, and don't assume that it will not come this time. Okay, toll plaza, please go through this. XYZ Highway Toll Plaza Limited operates toll plaza on a 100-kilometer highway and collects tolls from vehicles passing through the plaza. The company has estimated that every year a total of 60 lakh vehicles, 60% passenger vehicles, 15% high commercial vehicles, and rest are buses will be using the highway during the 15 years toll collection tenure. Right? 30 days in a month. Collection personnel, supervisors, details are given. Security personnel and toll plaza personnel. Other annual costs are given. The toll rate per vehicle is fixed as 500% of toll rate per passenger vehicle and 400%. Calculate the total cost per month for the toll plaza. Very easy. What is that? Total cost calculate ಮಾಡಬೇಕಂತೆ. All the costs they've given, just add it up. Did you understand? The company aims to achieve a 20% profit margin over total takings. Calculate the toll rate to be charged for each type of vehicle. Assume a 360 days year. It's 10 marks problem. I can't imagine an easier problem than this. Right? Look at this. Statement of cost. Personnel cost. Yes. Il koti the personnel details. Can you see this, all of you? 3 shifts. 10 personnel. The number of toll collection personnel per shift. And what is the salary per day per person? 30 days in a month. Idhirkin easy beka? Look at this. 3 into 10 into 800 into 30. Same thing is done for all the personnel. Is this clear? Same thing, nothing different. Then the cost they've given, just blindly copy paste and total cost has come. Right? Total cost again, add profit. So This is 80%. What is the total takings? 2.35 crores. Number of vehicles monthly, passenger vehicles, total vehicles they've given is 5 lakh. Arthak Tedya. Other 60% is passenger, 15% is heavy vehicle, buses 25. So these are the number of vehicles. Let the toll rate for passenger vehicles be X. Then they have given heavy vehicles will be 500% of this, and this is 400x. Equivalent units, are you able to understand this? Yes or no, all of you?
Yes.
Equivalent units, correct? Therefore, 3 lakh into x, 75,000 into 5x, 1,25,000 into 4x, number into that total, find out what the toll rate is. As 10. Then 20 into 5 into 4. I cannot imagine that they've actually given 10 marks for this problem. Extremely easy. Okay. Then comes overheads problem, I think. The factory has 3 production departments, P1, P2, P3, and 2 service departments, S1 and S2. Both service departments are independent and provide services. They provide services to each other. That means what? It is reciprocal. Following the detail of expenses of each of the service departments, S1 and S2. And they've given the percentage services. I told you this is providing. Correct? This is receiving. Therefore, simultaneous equation is the most important thing in this. Right? S1 is what? For S1, it will be equals to existing S1 plus what percentage of S2 is S1 receiving?
10%.
10% of S2. Right? Aste, idon matter, then everything else you can do it. Right? Same thing. Existing X plus 10% of S2, existing Y plus 10%, 20% of S1. Idon maad mele, then repeat the second distribution summary is here, where you consider percentages only of the production departments. Aste. Then take this cost, whatever you arrived at here, 277,551 for S2, and then 187, 755 for S1. Do it, you'll get the answer. Clear? Question 2, extremely easy. Consultancy firm provides project management service in 3 sectors: technology, healthcare, and education. All 3 are here. Right? All 3. The project management services covers development and implementation of software for various MIS requirements of its clients. The fees charged per project is as follows: technology, healthcare, education. It uses activity-based costing. So this is what? Fees charged, my selling price. So technology, healthcare, education, number of projects is given here. Service development hours, consulting hours, number of client meetings. Okay. Number of projects, software development hours, consulting hours, and number of client meetings. Overhead cost and activities. Management of projects IO. They have made it so simple for you. If you cover it, assume that this is not given. Assume that this is not given, and you only can easily find out. Tell me, management of projects will banbittu. What do you think? Management of projects, number of projects. Yes. Second, consulting, service delivery. Consulting andre obviously consulting hours. Next, client interaction and meetings, number of client meetings. Then administration and support, admin ge software development hours. Did you all understand? Even if this was not given, we could have done it on our own. Okay. So this is the total cost of this particular activity. The number of cost drivers is given here. Therefore, add it up and do it. Artha agta idea. So 8,10,000 divided by 40. You'll get cost per project. Is it clear, all of you? Right? Cost per cost driver. So if you ask me, sir, now you tell me, this kind of ABC problem, is it lengthy? This kind of ABC problem, do you think it is lengthy? What do you think?
No.
Right? It is pretty much straightforward. I would not say this is a lengthy problem. Okay. Identify the most profitable sector based on profitability percentage on fees charged. So 1A, right? First one is finding out what is the cost driver. Right? This is very, very simple. I told you 40, I only found out. Right? So 40 projects, cost per cost driver rate. This is found out. After that, this has to be done. Clear? Multiply 25,250 into the respective projects. Then each of the cost driver rates you multiply. Then total cost, number of projects, cost per project, fee charge is so much. Therefore, percentage of fee charged is the profit. Yes, let's go to the next one. So this is a product mix problem. SM Limited is a manufacturer of two products A and B. The following particulars are extracted from the records of the company. Maximum capacity is given. Therefore, this also is a limiting factor. Selling price per unit, cost per unit, raw material, then wages, direct expenses, variable overhead. Total variable cost you find out. Do it now, all of you. Add this up. Raw material plus wages plus direct expenses. Total, add it up. How much is this?
630.
630.
630. And here, add this up.
920.
Sorry?
920.
920. Therefore, contribution per unit, how much? 1000 minus 630. 370. 1500 minus 920.
80.
580.
Five.
The total fixed overheads for a product A is 2,50,000 and for product B is 3,50,000. The company manufactures both products using the same grade of material. The company is facing a constraint of raw material which is available in limited quantity of 1,10,000 kgs only. Therefore, if I have to find out what is the contribution per limiting factor, 370 per unit. For each unit, how many kg of how much of raw material is required? Here, 200 divided by 20, how much? 10 kg is required here, and here how much? 400 divided by 20, 20 kg. ಅರ್ಥ ಆಗ್ತಾ ಇದೆ ನಿಮ್ಗೆ? Yes. So this is the contribution per product per unit. Here you have got the kgs required for each product. Therefore, you can find out what is the contribution per kg. Right? Determine the optimum product mix. Again, I cannot find an easier question than this for you. Right? So look at this: 370, 580, 10 kg, 20 kg. This is exactly what we did, yes or no? 1 and 2. That means first exhaust A, then go to B. First exhaust A, then go to B. 1,10,000 kg is there. A, the maximum capacity 5,000 units. So 5,000 into 10, 50,000 kg. Balance 60,000 kg is for B. 60,000 divided by 20 is 3,000 units. 6 marks for this sum. Next. And they've asked you to calculate profit. Obviously, don't miss that. So this is a budgetary control problem. SVS Limited manufactures a single product AL. The company has estimated its quarter-wise sales for the next year as follows. In the beginning of the year, the opening stock of finished goods is 14,400. And the company expects to maintain closing stock of finished goods 29,400. The production pattern in each of the quarter is based on 80% of the sales. This is sales units. Therefore, into 80%, what will I get? Big idea. When I multiply 80%, what will I get? The production pattern in each of the quarter is based on 80% of sales of the current quarter and and 20% of the sales of the next quarter. So it is 80% of current quarter and 20% of the next quarter. Did you all understand? So either the 20%. Like this it is. Are you able to understand, all of you? Yes. The company maintains this 20% of sales of next quarter as closing stock of current quarter. As closing stock of current quarter. Clear? The opening stock of raw materials in the beginning of the year is 24,000 kgs. And closing stock at the end of the year is 12,000 kgs. Each unit of finished output requires 2 kgs of raw material. Input output ratio. Make a note, this is my input output ratio. Input output ratio. The production time required to produce 1 unit of product A1 is 5 hours. Okay. During production, the product uses 2 machines as under 2 hours, 3 hours, and 5 hours. Machine A requires 100 hours of maintenance after the use of 5,000 hours, and machine B requires 100 hours of maintenance after use of 3,000 hours. Required, prepare a quarter-wise production budget in units and the raw material consumption budget in quantity for the next year. Very easy. Calculate the total machine hours, including maintenance time, required during the year for machine A and machine B to manufacture product A1. Sales. So 72,000, 90,000, all of this. 80% of the sale in the current quarter. Next, production for next quarter is 20% of sale of the next quarter. That is, this is 90,000 into 20%, 99 into 20%, 1,08,000 into 20%. ಅರ್ಥ ಆಗ್ತಿದೆ ನಿಮಗೆ? Yes. Then they would have given next to the ಕೊಟ್ಟಿದ್ದಾರೆ ನೋಡಿ. On top, I'm sure they would have given. Closing stock they have given Allah. So they have maintained that closing stock they have given. That is what you will consider here. Did you understand? Look at this above. All of you come here. Yes. They have given the closing stock of finished goods is 29,400. This is nothing but 20% of Q1 of next year. Correct? Are you able to understand, all of you? Yes, Ramya, Nityasri?
Yes, sir.
So this is 80% and then this. Add this up, this is my total production. I told you always, the answer of this budget will become the starting part of the next budget. Raw material consumption budget, units produced. Into input output ratio, you'll get raw material consumption budget. This is consumption, not purchase. The opening stock and closing stock of raw material is not at all required because they've not asked raw material purchase budget. Is this clear? Then machine A and B, units produced is taken into machine hours per unit. It cannot, this is very easy. Then maintenance hours is done. That's the next one is anyway, stores ledger, cost accounting. Bunny. I think ABC analysis. Yes. ABC analysis, this takes a lot of time actually. So you have to be careful while doing this. So if you ask me, this is, I think, probably the most consuming question. ABC analysis. It'll take a lot of time. So first you have to do this. I would not do this problem in the exam. If you ask me, I would skip this. ನೋಡಿ ನೀವೆಲ್ಲ ಈಗ blind ಆಗಿ would have skipped ABC. No, in this case ABC was here. ABC, I mean activity based costing. Activity based costing was not that lengthy, but this ABC normally takes time. Clear, all of you? Normally takes time, lot of calculation. Are you able to recall, all of you?
Yes, sir.
Yes, this takes a lot of time because only this is given Allah. You need to calculate percentage for each line item. Total cost is given. You have to calculate percentage of cost, then rank it. After that, do this and then again draw this entire table. This, trust me, takes a lot of time and accuracy is also important. You might go wrong here. So my suggestion, I would not have done this in the exam. But I hope you know how to solve this problem. Then EOQ problem. Come, let's go to the EOQ one. A company manufactures electronic gadgets and uses a specialized component. The company incurs ordering cost of 1,250 per order. The carrying cost of storing the specialized components 25 per unit per annum. The company's annual production A, B, and C, all three are given. Calculate economic order quantity, number of IOO. ಇದಕ್ಕಿಂತ easy ಬೇಕಾ? Square root of 2AB, right? By C. ಅಷ್ಟೇ. Come here, right? So you should always write the full, abbreviations. I told you you should write this. 3,000 components divided by economic order quantity, you got the number of orders. Can't get easier than that. Then treatment of over and under absorption of overheads. Simple. Right? These are your, look at this. We went through so many theory questions. Let's see. Define responsibility center and discuss the types of responsibility center. Was it not covered? Right? List of advantages of job costing. This is there in your CAPS material. List the important factors which need consideration for controlling employee costs. Right? How you can control employee costs. Have we not discussed it? And look at this. I always think this is important. This has come in September. Uses of bill of material. It is there in your theory part of the revision material only. Marketing department, production department, stores department, costing and accounts department, 4 months. Yes. That's it. Okay, we've done an exhaustive revision. The ball is in your court now. Right? 14 marks. You saw the last 14 marks is the fastest, if you ask me. The last 14 marks of theory is the fastest. Do not miss that. Do not miss that. Just practice all the repeatedly asked questions. That's more than enough. You'll be able to write the question. Clear, all of you? And very important, costing mock exam treated like main exam in the same environment condition. 15 minutes to read, 3 hours to write the paper. Artak Teja, analyze, make a note of the order of the question you'll be writing, along with which question you will not be attempting. And in the same order, MCQ Madhyadalli, start with the most well-known question that you are comfortable with. Is it clear, all of you? Do that and try to attempt 100 marks. That is important. That is important. Accuracy as well as completing the paper is important. If you get stuck somewhere, it's okay. Do not waste your time more than 1 or 2 minutes there. Leave it, go ahead, and then come back later. You will be able to do it. Clear, all of you? These are fundamentals. Don't forget this. That's it. Anybody, any doubts you can ask me. Otherwise, we can conclude the revision session. That's all. Yes? All right. Thank you, everybody. Bye, all of you. Have a great day.
Thank
All
you,
the best.
sir.
All the best.
Bye,
Meet you all
sir.
at the mock test valuation. Bye. Bye.
Thank you,
Thank
sir.
Thank you,
you,
sir. Bye,
sir.
sir.
Thank you.